Hey, y'all. Welcome. You're listening to Winning at Life, live financial news talk radio. It's the Saturday edition and the 3-hour edition of live money talk. You know what our goal is today? Help you improve your financial decision making. That's been our goal for this show for 11 years, and we're sticking to it. If you've got a financial situation, not sure what to do, give me a holla. 504-2600-995. You can reach out to us through the Winning at Life app. Text, email, call through the app. Become a part of the Winning at Life Nation as well. You know, it's a big part of the show. The magic of it is the caller contributions. We make it safe. You're not going to get spammed or anything by having done so. We're just going to use the first name of whatever information you give us only. And you can even say you're calling for a friend. We have that happen often. A lot of people call for friends. So it's a safe place to get a little bit of help. And what it means is a lot of people are wanting that information that you're thinking about. Just think about it. You're helping a lot of other people when you make that call. So you can even email me directly, info@gregoryricks.com. And we're over on Facebook Live as well. So you can just shift over there and watch the show. And it uploads later if there's certain parts you want to jump back and catch and say, oh, I've got to take some notes on that and so forth. You'll have that opportunity to do so. The Winning at Life app will connect you to Dwayne Stein, which is going to be our guest this hour. I know, yeah, our tens of thousands of our regulars are used to guests being in the middle hour. Well, we're changing it up. We're going to have Dwayne Stein, host of Mortgage Gumbo, with us in the first hour. We're going to have a legal hour, on estate planning. And one of the topics I want to cover in that second hour is regarding inherited IRAs and this thing about people wanting to put them in trusts. And it's a big no-no. So we're going to talk about that because we're going to pick Wes Blanchard's brain. He's an estate planning attorney, and I'm going to ask him about special need trusts and how that should be handled as well. That is just, it seems like that comes up repeatedly, and it's a little more on my radar lately, and it's something we should every so often circle back around. I'm going to talk to Dwayne, might get him all riled up, but I'm going to ask him about Zillow, what the heck is going there today, and we'll talk interest rates as well. Let's see, that phone number again is 504-2600-995. And I know it's a beautiful day out. Everywhere, in fact. It's beautiful everywhere. But, take the show with you through the Winning at Life app. Do we have Dwayne with us yet today?
Yes, sir. I'm here.
Hey, Dwayne. How's it been going?
Good morning.
I'm getting some feedback there.
Yes, it is. It's fantastic. It's been a little crazy. We're finally coming out of the Ida turmoil, which, during Ida, we had on the mortgage lending side, a lot of the investors, and naturally, right, if it was your money, you'd want to confirm the house is still there and put back in place. So dealing with that, we finally, if you could believe this or not, last week wrapped up our last loan that we were dealing with when Ida hit. So, these poor folks, they've been through a lot, trying to get their house back in order and get a house. And we lost probably, Gregory, close to 3 dozen loans of folks whose house got destroyed. So they weren't able to sell their house, which meant now they can't move. So a lot of things we've been dealing with on the back end, which is just time consuming, right? Sometimes you can't move forward, but you got to get all these other loose ends tightened up.
Yeah, that is crazy time. Somebody's expecting to sell their house and probably bounce into another house, and that probably could kill two deals: the selling of it and the buying of the next one. Or what if it's done the opposite way? Did you have any situations like that where they bought one but they really needed to get out of the next one and can't?
Yes, that's exactly a lot of that happened, and probably out of the 3 dozen, every single one of them, that was the situation, right? Because what was happening was they were selling their house to purchase another home, and because let's face it, home prices are more expensive, so some people were moving up or upgrading, so to speak. So when their house got destroyed, that was something where they needed that to move in the sale of that house so they could use those proceeds uh, on the money they're making to go put into the new house, which gives them a much more affordable payment on a larger house because they made so much money on that house. That locked them down. So a lot of folks right now, hey, we're signing insurance checks. They're trying to get everything back so they can kind of put things back into place. And the unfortunate thing is, hey, what's kind of happened in that time frame, right? Well, not that rates have are horrible, but they're up a tad since they were in August. So you've got that effect now, right? In August, when Ida hit, it was 2.93. Today you're looking at 3.16. So you got a little bit of effect there. I mean, it's less than 0.25%, so it's not life altering, but at the same time, now when you go put that house on the market, while you're still going to have buyers, it's just a little bit more, right? And that's why we're seeing things sort of, I don't want to say slow down, Gregory, but you're seeing things where maybe you don't people coming through your house anymore. Maybe it's just 10 that are making offers on houses. So
Well, not
yeah,
only
unfortunately,
interest rates, and I'm still
yep.
hearing my voice echo in the background when I speak to Dwayne there. So you not only have interest rates up a little bit, but houses are selling for more, so that has to slow it down a little bit too.
You would think, you would think, and it has. The thing is now people have their wages are up, right? So people are making a little bit more money. And what we're seeing right now is now you kind of got that FOMO, Gregory, and we've talked about this years, and that fear of missing out. So now it's weird. People, instead of freezing because rates are going up, they're like, whoa, whoa, whoa. Maybe this is the time that they really are going to start going up. I've been hearing you talk about it for years, like it's the do theory, right? Well, I mean, heck, eventually it's got to come through. Well, I think now what you're saying is this fear of missing out. So, but in our market, unfortunately, think about it. I mean, we've got most of South Louisiana, the Terrebones, the Houma, all those areas down there are not even able to be on the market right now. They're not even able to refinance right now, a lot of them, till roofs are fixed and different things like that. So from a market standpoint, yeah, you got hot pricing at all-time highs now, but you still have a rate that is solid, right? And
Yeah.
and let's face it, Gregory, we've been around long enough to know, even if the rates go to what they're projecting to 3.7s, that's still amazing. But we're seeing them; they've creeped up. They're up and down all the time. But right now they're at 3.16. So that's not a bad thing.
So
But it is
kind
up.
of in South Louisiana, what you're saying also is it's reduced houses that ordinarily would be on the market, and we as a country are some 4 million houses short right now. And one of the things I talked about recently, when you start thinking about this, because of COVID and foreclosures couldn't be done, and I'll ask you, one of the thoughts is what's happening on that, and the other is these large equity firms are out there buying up houses for the purpose of renting. They kind of like the return on that. I know that doesn't work out for some of them, and we can get into more of probably what's happening there. And then the other
Mm-hmm.
comment that's on top of mind with interest rates is, yeah, it's up a little bit, but you, yeah, do you hear that in the back? I don't know if there's a mic on Dwayne's side. Oh, yeah, Okay, well, tell him that. See if
Dwayne,
we-
turn your headphones way down.
All right.
Yeah, I figured it was coming from his end. But next year, 2023.
All right. How's that?
Well, it's still there. I guess we'll just roll this way this hour. In this case, it's impacting the show. Interest rates are going up next year, last quarter. After the wind down, after midterms, I expect the Federal Reserve will start raising interest rates. Now, it looks like we might have a new Fed chairman, so I don't know what that's going to be. Overall, I don't think we're going to have
That's scary, Gregory, huh?
ridiculous
I mean-
interest rates. But still, if they're Guggenheim CIO thinks it's going to get to 2 to 2.25. I think that's a little optimistic on his side, but that guy really nails it typically. I think we'll get to 1.75 to 2 is where I think it will end up. But look, that's pushing mortgages, 30-year rates that we could see in 2023 on the back end of that looking like 4.25, 4.5%.
There's projections of 4.5. So what I like to tell everybody, and in your world, you talk in the treasuries, right, in the 10-year and all. So whatever it is, if for folks who aren't sure about mortgages and they're listening to you where you're covering the treasuries and what the 10-year the yield is, add 1.75, and that's going to give you a ballpark of right around where the mortgage interest rates are going to be.
Yeah.
So if we hit that 2 to 2.25, you're exactly right. You're looking at 4 a little bit over, right? So that is something that, and keep in mind, that's towards the back end of next year. So we've got to see what's going to be happening between now and then that's going to be affected. So we'll see. But yeah, it's I don't want to say it's challenging because at the end of the day, Gregory, everybody wants to be a homeowner. And, if I can't afford the $300,000 house and I can only afford the $250,000, well, when that $250,000 comes up, I'll take advantage of it, right? So that's where the market will kind of, and you talk about this, it'll work itself out, right? Because eventually if I can't get $300,000 for that house, then I'm not going to be able to do it.
Okay, we'll be right back.
504-260-0995. We are Winning at Life with Gregory Ricks.
If you've got a financial situation and you're not quite sure what to do, you better call Gregory.
Wealth is built by being successful and peeling money off. And when that jam of yours stops working, you've got a lot of money elsewhere.
Gregory Ricks and Associates, 504-832-9200 or GregoryRicks.com. Investing involves risk, including the potential loss of principal. Investment advisory services offered through AE Wealth Management, LLC.
What's cooking, Gumbo Nation? Cash is king. You hear this almost weekly on Mortgage Gumbo. In 30 years of mortgage advising, it's never been easier to purchase or refinance. And with rates now hanging back near all-time lows, don't miss an opportunity to get those home projects done with a low-rate refinance or purchase that first or new home with zero to low down payment option. Visit snapsendandsave.com. It's that easy.
If you like money, you'll love the Winning at Life app. On the Winning at Life app, you can hear the Ask Gregory podcast, where you'll find episodes based on a financial topic. So if you're looking for help on a specific situation, there's a good chance you'll find it on the Ask Gregory podcast, including episodes on 401ks, taxes, stocks, Social Security, gold, and whether or not you should buy an RV. Hear the Ask Gregory podcast on the Winning at Life app, your wallet's favorite app.
Half of estate planning is having a plan put together for your loved ones when you pass away. The other half of estate planning is dealing with someone else's plan when they pass away. Sometimes they have a great plan, but sometimes you need a little help. Don't leave your loved ones in a bind. Call me, and we'll make sure you have a plan. Hi, I'm Wes Blanchard, an estate planning attorney in Metairie. What's your plan? Find me at wjblanchardlaw.com.
The Ricks Report with Gregory Ricks.
What we found through history, looking at the past 90 years, most fund managers don't outperform or perform as well as the indexes. Using indexing, historicals teach us skew a higher return. And yes, there's bad stocks in the S&P 500 as it looks right now. And yet the index is up. I like to use indexed ETFs because those are much lower expense ratios. We try our best in managing our portfolios to avoid trading costs. And we know I've been doing this for 30 years. I've studied trading strategies. You're not going to outsmart the indexes. You may get lucky. You may get unlucky.
Winning at Life with Gregory Ricks. Find us on the Winning at Life app or winningatlife.com. Investment advisory services offered through AE Wealth Management, LLC. Investing involves risk, including the potential loss of principal.
Nowhere to go, nowhere to be. I got my shades on, top back, rolling with the music jack. One on the wheel, one around you, baby. Sunset.
Hey, y'all. Welcome back. Winning at Life, live financial news talk radio. If you'd like to join the conversation, we have Dwayne Stein on. You know, the questions that'd be good is maybe about your credit, what you should do. You could even ask Dwayne about his 10 commandments. He'll probably help you out with a couple of those that you need, especially like applying for a mortgage. And then, by the way, let's go get a new Ram 1500. I don't know that that's a good thing out there. You know, I had somebody comment the other day that was listening to your, and I know they were listening to your show because it was something about them buying 2 vehicles, and they were saying, yeah, and they were thinking it was on my show saying, you need to go sell one of those trucks if you want to qualify for the mortgage. I don't remember quite the story, but I have pretty good memory recall of conversations over the past 11 years. I could have done that at some point, but it sure sounded like a credit situation being there was a mortgage involved on that.
What's funny, Gregory, is people always love, they want to have that new shiny car. And that's commandment number 2 behind thou shalt not quit your job is don't buy a vehicle.
Yeah, they'll go spend $600 a month on that Ram truck. I'm just picking on Ram. It just because of that conversation what came up. But it could be the Chevy, the Tahoe, the F-150, the Tesla. It doesn't matter. People go get those shiny objects, and yet they're worried about having enough money. How do I get a refi done, or how do I buy that mortgage, or saving for retirement, and the shiny objects will come before those things that you need to have in order there. So if you can get that truck, you should be able to save some money and get that mortgage. So need to think more about what's going on overall. Hey, let's jump back to repossessions. Where are we at on that in the marketplace and COVID and the courts?
Not many. Not many at all, boss. Matter of fact, there's the number. Some numbers came out. You're looking at year to date through October of this year. We have repossessed 20,000 homes year to date. Last year was 50,000. So it's way down, and a lot of that has to do with the forbearance, right? So you can't foreclose, you can't begin foreclosure proceedings, and while people were in forbearance. And, you know, these are homes, and sometimes there's a such thing as getting rid of bad debt, and these are homes when you're looking at foreclosures and homes being repossessed, they're way, way down right now. And what that means is, what did you say, 4 million homes short?
Yeah.
So on average, the last couple of years, that number in 2018 was 2017 was right at 291,000, Gregory. In 2018, 230. So it's not like that would be a huge dent, but it would be something. I mean, we have a home shortage out the, as much as we've ever seen. But now it's even magnified by the fact of the repossessions and the foreclosures that aren't being put into place.
That's part of what's driving up home prices as well on that side. And let's jump over to these equity firms. So you're going out to buy median house out there, and you think you're just competing with other people in the market, but you may well have equity firms competing to buy that house you're interested in. Are you actually sensing any of that? Because we know it's out there, because we're going to get on to Zillow here in a moment.
Oh my gosh, yeah. Yes, it is, Gregory. And I got a question in my show previously, and they were asking about, I had someone go, hey, I've got some money. My parents want to back me. What are your thoughts on auctions, home auctions? And auctions aren't what you and I grew up on, right? Where you go, and TV has sort of glamorized auctions too, right? In a half hour, you can go buy a house, flip it, make $500,000, okay? So auctions, Gregory, we're not getting to that point because now the banks will hire an agent. Well, then the agent has these investors like you're talking about, the equity firms, right? If they don't go straight to the investor. So then that agent has the opportunity to sell it to them. Then if they can't sell it to them, they go and, hey, anybody in my office, any of y'all looking for investment properties? No? Okay. Now, do I want it? No. So now it's went through 3-4 hands. Now it maybe goes to auctions. But yeah, rents are at all-time highs. So these folks are coming in and they're buying these because they have the money to fix them up. And Gregory, what we see, and this I've never seen in 30 years, what we are now seeing is the profit on these equity firms are buying these houses and flipping them. We had one that it was over $100,000 in 90 days. We actually had to wait because you have to wait so many months by law to do like an FHA loan, for instance. They make you have to wait when you're making over 100% profit on a home. And that is what we're seeing more than ever. And I mean, it's because there's so much profit because they're selling to these equity firms who can get the roofer, the contractor. They've got these folks on speed dial and they're able to get in there, flip these things over and just ramp up and make a ton of money. However, this is what I've seen as well. Some of these are selling for less than what maybe market is because why? They got a bundle of 10 of them versus you and I going buy one. So they can afford to sell it a little bit below market value, give somebody a great deal. They make the money, but what eventually is going to do, what's that going to do with home prices? Well, it's going to bring them down, right? Because now I've got to use that sale as a comp when I'm going out and buy the next house. My appraiser has to use that sale that might be $10,000 or $15,000 below what value is right now.
So what's bringing down the valuation again?
So in other words, when they go in and they buy a bundle of 10 of them, well, they know what their number is, so they don't necessarily have to sell it at that 300,000.
Buying is doing
right.
that.
Yes. So they could sell it at 290. They get out. They know what their bottom line number is. They get out. But now that 290, when Greg wants to go buy or Greg wants to sell his house next door, well, now when it's getting appraised, now they got to use that 290 versus it was going for 300,000. We saw that this week on somebody's house came in because the neighbors sold their house to an investment company because they were getting themselves financially in trouble, and we had to use that as a comp, unfortunately.
Yeah, that's another thing that has impacted auctions over the years where you used to get houses would show up at auction and there might be 6 to a dozen bidders out there. And now one of the things is why wait for it to get to auction? Because it's publicly, there's a public notice. So reach out, see what's going on with that house and let's get a deal done on it before it goes to auction there. Yeah. And it's even offering them some cash that they weren't going to get at the auction to sell the house. The whole landscape, if you were watching one of those investment real estate shows a decade ago, those rules have changed in the marketplace, along with equity firms now with big money going out there. What the heck
and that's why these rents are through the roof.
Yeah.
That's why rents are through the roof.
Yeah, and rental business is big now.
Yes, it's tremendous, Gregory, and you just nailed it. I mean, those equity firms could come in and buy it. And so now, it's you. I mean, people are now knocking on doors, and these investors have ways of letting. I know people that pay $5,000 to go knock on doors to see if somebody wants to sell their house. So they owe $150. The house is worth say $200,000. They'll give these folks $20,000 to get out of the house, right? Get them out of the foreclosure. They just sign over the deed. They pay off the mortgage. The folk walk away with $20,000. They fix the house up and go sell it for $225,000. Make themselves $30,000 in 90 days, and they move on. It's happening in every single neighborhood, no matter if it's a gated community or not. It's bananas what's going on right now.
Yeah, what I'm feeling out there is I'm getting calls about my house, and and I had
Do
a
you
guy
want to sell?
a call. I was sitting out there on the back porch having a glass of wine. I get this call. I answer it, and he's like, "Yeah, you interested in selling your house?" I said, "Sure." And he asked how much I was wanting for it. I said, about $3 million.
Yeah.
I just put out a ridiculous price. Then he changed the subject because it went back and forth, and then I finally put a number on it. Said, $3 million will get me out of it. So that's hugely overpriced there. So, and then he switched the subject to about somebody else in the neighborhood. And I was like, "You're not interested in mine?" "Oh, no, you want too much." Yeah, well, it's not for sale. So anyhow, but you get these calls all the time. And part of our property that when we acquired this has another lot attached to it, but I have a structure on it. But technically, the way we kept that lot separate, but it can't be separated. And then I get calls about that. On Wazoo Street, and it's not for sale. Actually, that one's probably even more expensive. I'd take $5 million for it,
Yeah,
So
exactly.
from that standpoint, so you not only have the door knockers, but they're just calling you up from that standpoint. So when we come back, let's get this out the bag. What's going on with Zillow?
And you still have time to talk with Dwayne Stein, host of Mortgage Gumbo and a member of the Total Wealth Authority. 504-260-0995. We are Winning at Life with Gregory Ricks.
Hey, James Parker here from Winning at Life. Something that's come up on the show over the last 10 years is that if you're not at your old job, maybe your 401k shouldn't be either. But do you really know why we say that? It's a funny thing. We put a few $100 in our 401k every month. It ends up to be thousands of dollars every year, hundreds of thousands of dollars over our career, and you don't really know that much about it. How do you invest it? How do you diversify? What do you buy? What do you avoid? If you've got a financial situation and you're not quite sure what to do, ask Gregory. Ask Gregory is our new podcast with these financial topics broken down into specific little chunks. So if you have a financial situation or you just want to learn more about money, ask Gregory. Find the Ask Gregory podcast on the Winning at Life app, the iHeartRadio app, Google Podcasts, Apple Podcasts, and Spotify.
And I want to thank you for all of your help. That's exactly what I needed to know.
Investment advisory services offered through AE Wealth Management, LLC.
2 questions. Do you have a pulse? Do you own anything? If you said yes to both, you probably need a will. You may even need a trust. We all know a lawyer. Do you know someone who specializes in estate planning? Do you really trust the husband of your sister's friend from college? Or would you feel better putting your family in the hands of the estate planning attorney of the Total Wealth Authority? I'm Wes Blanchard. What's your plan? Offices in Metairie and at wjblanchardlaw.com.
If you like money, you'll love the Winning at Life app. On the Winning at Life app, you can listen to the show live 6 days a week. And if we're not on at the moment, you can hear a replay of the latest episode of Winning at Life. Whether you're getting a late start on your retirement savings or keeping up with the financial news, Winning at Life with Gregory Ricks is there on demand. Hear the Winning at Life show on the Winning at Life app, your wallet's favorite app.
'Hey, James Parker here from Winning at Life. Something that's come up on the show over the last 10 years is that if you're not at your old job, maybe your 401k shouldn't be either. But do you really know why we say that? It's a funny thing. We put a few $100 in our 401k every month. It ends up to be thousands of dollars over our career, and you don't really know that much about it. How do you invest it? How do you avoid? You've got a financial situation and you're not quite sure what to do, ask Gregory. Financial
Most people think of Crime Stoppers as only a tip reporting line, but we're so much more. Crime Stoppers GNO has worked in our area schools, offering prevention presentations on trending topics from drugs, bullying, online safety, suicide prevention, and much more. And we have a high school teen leadership program which provides students with a first-hand look at the criminal justice profession as a future career, while learning to be an advocate for their fellow students. So to learn more, visit safeschoolsla.com or call 504-837-8477.
Fox News, I'm Karen McHugh. Angry demonstrators taking to the streets of Vienna, Austria today as that nation prepares to go into lockdown once again on Monday over a sharp increase in coronavirus cases. That and a government plan to mandate COVID-19 vaccinations have hit a nerve in the European nation. Alarming numbers of COVID cases are also being reported in the Netherlands, Germany, and the Czech Republic. Plenty of great college football matchups on tap today.
Within the coveted top 4 playoff seeds, all but number 1 Georgia are facing a top 25 foe. Today, the Bulldogs take on Charleston Southern, while second seed Alabama takes on number 21 Arkansas. Third-ranked Oregon goes up against number 23 Utah, and fourth-ranked Ohio State is facing number 7 Michigan State. Those are the only contests taking place today within the top 25.
Fox's Matt Napolitano. America is listening to Fox News.
Winning at Life with Gregory Ricks is a copyright of Down South Strategies for the private use of our audience. Any unauthorized use of this broadcast without express consent is prohibited. For podcasts, show information, and contacts to our sponsors, go to winningatlife.com or download the Winning at Life app. If you've got a financial situation and you're not quite sure what to do, you better call Gregory. We are Winning at Life with Gregory Ricks.
I believe most people are good and most mamas ought to qualify for sainthood. I believe most Friday nights look better under neon or stadium lights. I believe you love who you love. Ain't nothing you should ever be ashamed of.
Hey, y'all. Little technical difficulties here this morning. Y'all probably have heard Angie's voice. So she's helping me out, kind of her first day to do that from a board standpoint. We do have James Parker here in studio with us, and as I've shared with y'all a few weeks ago, this is actually his last day with Winning at Life Radio. Him and his family are moving to Texas, kind of back to where he grew up. You know, it's been calling him for a while out there. So, and we've enjoyed him being a part of the show for 11 years. He'll probably get on mic here in a moment and talk, but we've got 2.5 hours more to go on the show. But if you'd like to join the conversation, maybe ask about a refi, rates, credit, where things are going, or Zillow, you can call 504-260-0995. And one thing I am going to ask Dwayne after I get through the Zillow talk, because I really want to hear his take on it. It's just amazing the mess they made of their company, it looks like, out there. But in this environment of higher prices, interest rates ticking up a little bit, in this environment, what tips, knowing the landscape's a bit different, what tips does he have for getting it done? So I'm going to get to that here in just a moment. But Zillow is this online firm. Did I give the phone number to call in? 504-260-0995. You can text and email and actually call through the Winning at Life app, and email directly as info@gregoryricks.com. And reaching out to Dwayne, his is easy. It's mortgagegumbo.com. You got you one of those apps yet, Dwayne?
Not yet. I'll get with you on that sooner rather than later, sir.
I could give you some tips, but I can't actually do it for you. I'm not that good from that standpoint. But Zillow is an online website that you can kind of go and look for homes on that, get connected with a realtor and stuff. but I did not realize they were in the house flipping business. And recently I don't know how long they've been around. I might have been on their site once or twice, but we were talking with the kids a few weeks ago, and I think it was Luke brought up, or Emily's like, well, you can go to Zillow and look up what the price of your house is. And, oh, your house is on there as well. I'm like, what? I didn't give them permission to do that. And they said, oh, everybody's is. And you can find out what they've got, prices and everything. So I don't know how they do that, but obviously there's a lot more information. And then my wife asked me, well, why is our information on there? I said, well, if it's public record at the courthouse, it can be up there, obviously. So help us out a little bit. You probably know more about the Zillow thing going as well, because they had some algorithms on what they could buy a house for, then flip it for, and they got into the flipping business. Understand they were holding or had deals on or holding more than 10,000 houses across the country. And they've lost like $500,000 already, and they're selling off big chunks of it to home equity firms. That's kind of the gist of what I understand.
So what you were talking about, as far as, you're correct when Stacy said, it's public record. Now, what Zillow affectionately calls is their Zestimate, right?
Zestimate. Okay.
Zestimate. Right. Now, I would hold that. I wouldn't look into that too much, because most of the time it's wrong. But what Zillow did is they created what they call an iBuyer, right? Everybody is going to, and they started doing this last year. And what they it's kind of like the stay in your lane comment that's out there, right? I mean, I know what I do well. And if I have, somebody says, hey, what about estate planning or accounting or financial services? Then I say, hey, here's who you need to call, right? You want to speak to a Hall of Fame financial advisor? Here's your guy. But what Zillow did was they created this called iBuyer, and they became, Greg, sort of like the bully on the block, the bull in the China store, where they were going in and they were undercutting people and buying homes from folks, kind of like you talked about knocking on the door, right? And these fix and flips that they were going in and getting at a huge discount, and they thought, hey, we will be able to turn these homes over, flip them, and make a profit. Well, what happened in the meantime was a little thing called inflation, right? Lumber shortages, lumber prices going up. So they sort of got caught with their hands in the cookie jar, to the point of all these homes they were going in and paying for and buying. Well, their profit margins weren't where they needed to be, and they were losing a bunch of money. So what they've had to do is close down that entire department. And this is only going to be the first of, I think, several more that's going to come, because a lot of people tried to get into this world. Zillow's the biggest name, of course, right? But when it comes down to it, they were going in, and what stinks about this is these are houses that maybe never got on the market, never got to auction, Gregory, like we talked about. These are ones that agents weren't able to market and list for people to be able to buy. They were sort of being the hog and just kind of the hungry hippo game for folks that's been around, right? Just try to eat as many marbles as they could. And then they got burnt, because now they're holding all this inventory when there's a shortage, and yet they can't deliver because they're trying to hold off on, well, maybe lumber prices will keep, kind of like every other person out there right now. Well, let's see if this goes down or don't. To the tune of now they had to lay off a quarter of their workforce, and they're going to lose millions upon millions of dollars. And last I checked on Thursday, I don't know what it did yesterday, I think it's absolutely destroyed their stock price. So it's got to be costing them stockholders as well, this poor decision to kind of let greed kind of get into an industry that, while you're in that industry, that's not where you specialize. It'd be like me all of a sudden saying, just because I help people finance homes, I'm not an inspector, right? So it's like, hey, yeah, look, I could give you 3.5% and I'll come out and inspect your house. Well, that's probably not going to work out in your favor. So that's where I think they overstepped their boundaries, and tons of realtors. It affected a lot of different realtors and buyers. So, you know, you don't want to see people losing their jobs by any means, but at the same time, I think when you're looking at it, they should have sort of stayed in their lane. So, you know, in the industry, we're all kind of like, hey, nanny, boo-boo, that's good for you. You know, you got burned, so to speak.
Yeah, and that seems to be part of driving up prices. If they didn't have margins, that just says right there they were overpaying or shouldn't have bought it. And I can't imagine doing that across the country without having boots on the ground, so to speak, to inspect, look out, make sure where you're at. It's just housing is so unique, and it's to each investment properties different than the other. You can't use one rule and say this is going to work for everywhere unless you're taking a super long view saying, you know what, this all will shake out well over the next, say, 10, 15 years or something like that, if you're taking a long view. But business kind of has to look at right now. So what are some things people, and this will take us through this segment into the next, but what are some tips for people to improve their house buying decisions and the process of getting a mortgage?
Well, I think the number one thing that, look, it's no secret, inflation's up, right? And you're hearing, well, hey, here's the median home price. Listen, that's not in our market. So number one, the first thing you've got to do is know these two. It's 4 words, but you got to know the big difference. It's pre-qualified versus pre-approved. In reality, I guess it's 3 words, right? Because we use pre in both. But pre-approved versus pre-qualified. Every day, because of Snap, Send, and Save, we see people that are being told they're pre-qualified, Gregory, which basically means Gregory calls me and says, hey, how much home can I afford? Gregory tells me, I make this much. What's your credit score? This. All right, yeah, cool, go get it. But you never verify anything. Okay, so what does that lead? That leads to realtors being chauffeurs. That leads to people going out looking at houses that is in the 300 range when maybe they're 400 or maybe they're 280. So, or they don't go into a certain program. So being pre-approved is the number one thing, which is why we created that snapsendandsave.com.
I would think that gets you better service from the realtors if you're pre-approved. Let's pick up on that when we come back from the break here.
Dwayne Stein in studio. If you have a question, give us a call. 504-260-0995. We are Winning at Life with Gregory Ricks.
If you've got a financial situation and you're not quite sure what to do, you better call Gregory.
Most everybody's wealth is tied to their 401ks. And if you have a chance to put money into a 401k and you decide not to, you're robbing yourself, because there's one important part that you might not be aware of. Yeah, you got to put your money in, but typically they're matching it. You know, there's a phrase, if it's free, it's for me. Well, that's what the matching is in your 401k, and it's a significant impact. You should at least be getting every bit of that match. And if you're not doing so, do something about it tomorrow and get that started.
Gregory Ricks and Associates, 504-832-9200 or GregoryRicks.com. Investing involves risk, including the potential loss of principal. Investment advisory services offered through AE Wealth Management, LLC.
Mom, it stinks.
Hush, I'm almost done.
All right, now you're safe from bugs in the backyard. Don't let mosquitoes ruin your outdoor fun. Call Mosquito Joe today. When you call, they come out and they do the spraying. Mosquito Joe's time-release capsule lasts for about a month. No more sticky bug sprays. Take back your backyard. NewOrleans.mosquitojoe.com. NewOrleans.mosquitojoe.com.
Ask Gregory is a financial podcast from the guys who bring you Winning at Life with Gregory Ricks.
I am near retirement, and I wish I would have been listening to y'all for the last couple of years.
Learn the ins, outs, do's, don'ts, rules, and tools of the financial world.
Hey, I love your show.
Find the Ask Gregory podcast on the Winning at Life app, the iHeartRadio app, Google Podcasts, Apple Podcasts, and Spotify.
That's exactly what I needed to know.
Investment advisory services offered through AE Wealth Management, LLC. The Ricks Report with Gregory Ricks.
So part of our invest 50-50 money management philosophy is to use stock ETFs. We like the indices. We're not going to beat them, so let's join them. Somebody will say, well, what's your track record? Well, what's the track record of the S&P 500? Because that's what we're using, the Dow, the NASDAQ, and some of the sub-indices there. Well, what are you doing on bonds? Well, we like those on the ETFs because I'm not in the buying houses and selling houses business. You know what the pain it is to sell a house? Well, that's kind of like selling a bond. You got to list it and wait for bids. I'd rather do it inside of an ETF that has low expense ratio and let the institutional guys help with that selection.
Winning at Life with Gregory Ricks. Find us on the Winning at Life app or winningatlife.com. Investment advisory services offered through AE Wealth Management, LLC. Investing involves risk, including the potential loss of principal.
But you gotta keep your head up, oh, and you can let your head down, hey. You gotta keep your head up, oh.
Winning at Life. Live Financial News Talk Radio. Next hour, we have Wes Blanchard coming up to help us with some estate planning questions and concepts. Really, one of the core things you need to have is a will, and everything kind of starts there about making life better. And when you're done with your stuff, it helps everybody else get along when splitting your stuff up. So join us for the next hour here on Winning at Life. The number to call, 504-260-0995. Dwayne Stein, host of Mortgage Gumbo, which you could catch him mornings on this station here. And I think you're on again after our show at 1 o'clock today, but you can also catch him through the Winning at Life app also. One of the key things he gave us right before the break is pre-qualified versus pre-approved. And those real estate agents know what pre-qualified is, right, Dwayne?
Well, yes, sir, absolutely. And the biggest thing is, and the reason why the pre-approval in today's market, as we were talking about earlier, it's competitive, right? You have lack of inventory. So when you are going through and you're making an offer, the seller agents, they want to know that somebody is pre-approved. And we average closing our loans in 15 days, Gregory, and Winning at Life Nation. So what that means is we are able to, what we're able to do is we're able to get ourselves, I'm sorry? Okay, so what we're able to do is we are able to, with this pre-approval offer, we give you as the buyer a little bit of leverage because you can go in and make an offer saying, hey, we could be approved in 15 days because we can close in 15 days because you've gone through our program, you've been in front of an investor, and all we're waiting on is the appraisal and the title to come through, which then that's back, Gregory, on the seller, right? Is your home worth what you're selling it for? And have you done all the title work to where there's no liens or encumbrances? So that's why the pre-approval is the number one thing, and it allows you to find out what's my credit, where's that at, how much home can I afford, so you're not out wasting your time and getting to the point where something that you may be looking at that you can't really buy or afford at this time.
Yeah, and I like that conceptually because it puts you in a position of strength when you're buying. That you're basically telling everybody that you're dealing with or looking at, hey, I'm good to go. If I want this place, I can make this happen pretty quick versus, and that's documented that you're good to go versus saying so. You helped me buy a country property not too long ago, and I didn't go through this I didn't think I was going to be a buyer, but I kind of found this place I liked out in the country, and I said, heck, I'm gonna have to buy this place. So I looked at it, hour later, had a verbal agreement, but I wasn't pre-qualified or pre-approved, so I had to go through that prices, but there was some faith there on both sides to get the deal done. But it would have been a lot better to be pre-approved, right?
Absolutely. And our pre-approvals are for 120 days. So, yeah, look, does that bug sometimes come up where, hey, a property shows up where it's next to family or something like that comes up? Absolutely. Maybe somebody in the homeowners association says, hey, I'm selling my house, and your best friend lives in it. And then all of a sudden they go, hey, you interested? And you wasn't thinking about it. So those things do happen, Gregory. Yes, like in your situation when it's like, hey, you know what? I can't miss out on this opportunity. However, that's where we go into super action going, hey, what do we need to make sure that we get done so we can get that for you? But that's the important part. Now, your situation was good because, hey, you checked all the boxes. Everything is fine. When that happens is if sometimes we get somebody and it's not, well, then we got to go into scramble mode. But that's what we do. That's why you hire us. Gregory, yesterday we got somebody's credit score improved by 22 points, not costing them 1 point. They went to a bank. The bank told them they couldn't do it. All we did was move some money from one credit card to another credit card to get their score up. So now they could buy this home and they qualify for a no payment down versus having to come up with 5% and use all their savings at 23 years old, right? So that's the difference on why getting pre-approved is important. And now they could buy a more expensive house with less money down because we know what we're doing when it comes to credit, and we don't just look at a number and go, sorry, can't help you.
Well, why is that? And we're not going to, and this isn't a hate on bank thing, because I always enjoy doing business with you as well. But there is a difference, something different you bring, because this you handle my situation where I wasn't even pre-qualified, and we got all that with your help and getting things expedited to get that deal done. But I've heard this so many times, and it's even years ago when we started working together, helping clients together, is one of them, he says, like, I cannot get a refi done, and he had a ridiculous rate. And next thing I know, he's like, yeah, we can fix this. And then you can go in and fix credit. Like, why doesn't the bank do that?
Well, I think number one is it's not that important. The banks are set up to be banks, and then banks all of a sudden started getting into the lending side, right? And for me, I could sell cheaper rates, cheaper fees, because the investor don't pay me until I deliver Gregory Ricks's loan, or I deliver John or Sarah's loan. So for me, it's no cost or obligation for them. So I have to hustle on my end. So I have to have different tools that are going to be able to, and I've got to be more knowledgeable than the person who's, hey, what would you like? What are you here for today? Well, I want to see about getting a mortgage. All right, well, go talk to Sue, who yesterday was a teller. Now today she's the mortgage advisor because somebody didn't show up. So there's a big difference there. And I take pride in knowing and being able to do those things. And the big thing, Gregory, too, is credit don't intimidate us. A number does not intimidate us. We can't help everybody that second, but I could tell you exactly what you need to be able to do, which is what gives us the upper hand. And I'm able to tell that agent, listen, we're working on getting their credit score up, so now they can go with this program, so you're good to go write that offer. That is what, and we confirm it. We don't just go to somebody, hey, it's going to take you 10 grand. That's what's called, Gregory, to let you on the inside, what most lenders use is it's called a what-if simulator. Well, look, I could sit there and play that. What if I was 6'5", fast, and good-looking, right? Probably be in the NFL. But unfortunately, as much as I play with that what-if simulator, I don't become a hot model. I'm still big-boned and ball-headed. So what we use is we use something that tells us down to the penny what you have to do on each thing, instead of saying, all right, well, if Gregory had 10,000, look, we could get his credit score up this amount. No. And that's where I went in, plugged into our credit system, and came out and was able to tell this person, hey, I can get your score up. All we got to do is change these balances. They did that. They sent me proof they did it. And within 24 hours, we had their credit score up, whereas banks, it's 30, 45, 60 days. So it's the tools, right? Maybe I can work on an engine, but do I have the tools to get the engine out of there? right? So that's what it comes down to. That's what it comes down to.
I'm excited about that information and for our listeners to knowing that, you know, I'm about customer service and getting help. And then when you show up pre-approved, the realtors are excited because they know they're showing you the correct houses. The people you're looking at are wanting to sell their house. If you're making an offer, they know you're good to go, that this isn't going to drag out a while because they're probably trying to take care of an opportunity. We've got about a minute and a half left here with you. Is there, as great as that is there anything else that would be like magical to help get deals done?
Look, here's what I would tell you. I would tell you right now, go and, you can go to Gregory Ricks and request it, GregoryRicks.com, or call it. Look, the 10 Commandments, I will send it to you for free. These are mistakes, and it's the 10 Commandments of getting a mortgage. And it is simple things that you could follow. So we kind of play on, when you say 10 Commandments, you know what? I might want to pay attention. We all relate that to a much powerful source. So those are the things there that we will show because, Gregory, in my 30 years, I've seen it all. I've seen people spend their down payment money buying a bride, online bride, if you believe it or not, a couple years back. So I have seen it all. So we want to help you understand, whether it's using me or not, what you need to do to prep and what mistakes when you're buying a mortgage, and whether it's a purchase or a refinance, what you should be following, because these are big deals. And especially you first-time home buyers out there, or folks that are listening who have those kids that are getting in this market, you don't want to make a mistake on this first house that could put you behind an 8 ball for the rest of your life.
Place to go is mortgagegumbo.com. Is there another for that snap, send, and save?
Snap, send, and save.com.
Okay.
We'll let you know what your buying power is.
Awesome. And if you can't remember that, go to GregoryRicks.com. You can link up with Dwayne on our site.
Advisory services offered through AE Wealth Management, LLC. Winning at Life with Gregory Ricks for informational purposes only and does not recommend the sale or purchase of any specific securities, investments, legal advice, or tax advice. Investing involves risk, including potential loss of principal. Raw conversion is a taxable event and may have several tax-related consequences. Be sure to consult with a qualified tax advisor before making any decisions regarding your IRA. The information and opinions contained herein are provided by third parties and have been obtained from sources believed to be reliable, but accuracy and completeness cannot be guaranteed. Neither AE Wealth Management nor advisors providing investment advisory services through AE Wealth Management recommend or facilitate the buying or selling of cryptocurrencies. The firm is not affiliated with the U.S. government or any governmental agency. The firm offers insurance services. We are Winning at Life with Gregory Ricks.
From the Gregory Ricks and Associates Wealth Management Studios, WRNO-FM, New Orleans, an iHeart radio station.
Getting a jump on Thanksgiving travel. I'm Pam Puso, Fox News. That's what millions of Americans appear to be doing. Yesterday, the TSA screened more than 2.2 million airline passengers. That's the highest checkpoint volume since March of last year when the coronavirus pandemic took hold. During the Thanksgiving period, the TSA expects to screen about 20 million air passengers. Emotions ran high Friday inside and outside a courthouse in Kenosha, Wisconsin. That's where Kyle Rittenhouse was cleared of all charges.
Kyle Rittenhouse breaking down in court, grabbing his knees and sobbing as he stood in front of the judge, hearing he was found not guilty on all 5 counts. Also in the courtroom, the loved ones of the 2 men killed by Kyle Rittenhouse.
We need to focus on what's most hurtful here to these people, myself included, which is the loss of life and the sanctity of life. I am not pro-violence or pro-destruction at all, but life is more important.
Now the jury deliberating for more than 23 hours here. The defense saying that the jurors had confidence this entire time because they just heard the facts of the case.
Fox's Alexis McAdams. Ann Benson owns a business in Kenosha and is hoping protests stay peaceful.
We're trying to stay positive and strong here because our community is a good community, and we want to portray that to people that want to come and visit.
Last night, a demonstration in Kenosha was peaceful, but last year businesses were burned and looted following the police shooting of Jacob Blake. Tens of thousands of people are demonstrating in the Austrian capital of Vienna. They oppose a new national lockdown that takes effect on Monday because of soaring COVID-19 cases. In February, Austria's government plans to make COVID-19 vaccination mandatory. America's listening to Fox News.
Hey, y'all. Welcome. Hour 2 of Winning at Life, live financial news talk radio. We're here for you every Saturday. We start this show at 10 a.m. and we roll until 1, giving you financial information, tips, guests that can help you, like Dwayne Stein, host of Mortgage Gumbo last hour. What a great hour that was. And we have Wes Blanchard, estate planning attorney, with us this hour. You have me as well, so if you've got a financial situation, not sure what to do, give me a call. We've got Glenn going to come up here in a moment. We're going to take his question on Social Security, but we have Wes Blanchard here with us this hour. If you've got that question for Wes, for me, or a thought on improving your financial decision making, here's the number: 504-260-0995. You can watch us over on Facebook Live. Am I on the screen up there waving to people? I kind of not sure. I can't see myself up there. No, I'm not on that other side, am I? Okay, we're getting up there, getting the cameras back rolling there from the break. So you can reach out to us through that. Catch the replay later on the show also. The Winning at Life app, text, email, call through the Winning at Life app. Become a part of the Winning at Life Nation. More information about me, Wes, Dwayne, other contributors over there at GregoryRicks.com in the media tab. And check out that news blog on my first page, landing page, that upper right corner for more information. So let's get started here and take Glenn's call from Algiers. Hey, Glenn.
Good morning. Good morning.
How are you doing
Gregory.
today?
Appreciate great. Appreciate you taking my call.
Oh, you're welcome.
I'm 71. My wife is 61, and I was calling you about when she turns 62 next year. Is there a way that I remember y'all talked about a long time ago about for her to collect like 50% of what I get from Social Security? Is there a way to do that?
Yeah, so you're 71, so we know you've already turned on Social Security.
Yeah, I waited till I was 70 to retire.
Right. Just for the listeners, there's no need to wait past 70. It doesn't get any better for you. So on 70th birthday, you have to flip the switch on that. Her option is she can turn on her record or off of your record the spousal benefit, and they're going to give her whichever is larger when she turns it on. It's not a situation where she said, well, let me take this one and switch to the other later, because you already have yours turned on. So when she applies, they need to look at her work record, and then they'll look at the spousal benefit from yours. Now, either one that she turns on at 62 is going to be reduced because her 100% benefit of either is at full retirement age for her, which would be 67 in that case.
Right. Okay, I thought that she could turn that on, take half of it, and still accumulate the years till she got to 67, but she can't do that.
No, she cannot do that. There is no suspend benefits, so to speak. You know, she can't.
Okay.
She can't. Let me park that and go to the other. They're going to turn on whichever is best for her, meaning give her the most money.
I appreciate it. Always enjoying your program. Take care.
Okay, thanks for the call. Yeah, he's referring to benefit used to be there is to restrict the benefit there, and Social Security and money saving moves a few years back eliminated that option there as well. And that's where sometimes people are confused about that, where they think they can turn on theirs and switch to the spousal and get 100% of that later. No, once you turn it on early, and that's even if it's for your own work record, if you turn it on early, you've locked in that benefit thereafter. Some people think, oh, when I get to FRA, it switches back to 100% of that. No, it does not. You've locked in that benefit forever. Thank you for the call. Once again, you're listening to Winning at Life Radio. We have Wes Blanchard in studio with us. If you have a financial situation, you're looking for a Social Security question, 401k question, or estate planning, and I want to talk about trusts and naming of beneficiaries from IRAs. And I had this come up last week. It came up again this week. It came up last month, where people are making requests to change their IRA beneficiaries to a trust. And then the other part of the question is, the rules kind of changed on that. And I think we had a caller into the show this week, Wes, also, where somebody was looking at, well, what about RMDs? When he inherited money, when do I start taking RMDs? Actually, the owner died last year and left it to him. And I said, actually, you don't have an RMD until year 10.
Yep.
Then it's 100%. So, and I'll let you share some thoughts, because I know you've got a lot going around about that. So once again, welcome to the show. How have things been going?
Great. Happy to be back, of course. Thanks for having me as usual. But yeah, jumping right into the topic, I always think that's a pretty interesting little tweak, because it does show you the overlap between financial planning and estate planning right there. And it's something that does come up relatively often when a lot of folks are leaving their largest asset, which is generally an IRA or a 401k or some sort of investment vehicle, and they have that beneficiary. I had a question about that a little earlier this week from a client, and they asked a lot about what you're talking about here, which is, look, your beneficiary designation is going to overrule what's listed in your will. Okay, so that's the first thing to understand. That distribution is going to go by that contractual beneficiary designation. Your will can't change it. Okay, then the next step is what you're hitting on. Well, then how do I put some restrictions on this large inheritance that, my unruly child is going to get, and I think that they're going to spend it quickly. And that's when we start seeing, questions about trust start rolling in. For years and years and years, we had an IRA beneficiary trust that we were using to kind of handle that situation and make sure that asset wasn't squandered. But now they've really kind of pulled the rug from under that strategy when they took the 10-year rule out, or put the new one in, I should say. And they said, look, we don't care what you do with it, but it's got to come out in 10 years.
Yeah, you can control it for 10 years with a pass-through trust in that case, but all bets are off year 10, because 100% has to come out of the account. When it really comes down to it, mainly it's once you pay taxes on the money, you can control it however you want to. And that's the surprising thing that people don't realize is, I have to pay Uncle Sam, and then you have full control of the assets. But prior to that, it's going to the beneficiary. So here's kind of the situation that, and I'll plug some holes in, because we want to protect the innocent on this. What you hear on those, it goes back, long time ago. I don't know, what was it, Adam 12, or there was these cop shows when I was a kid, thinking about, we've changed the names to protect the innocent. I think it's all made up anyhow.
Sure.
Like, we're using real life events to run TV shows on there. So a situation where somebody has money and they know they're on the back end of life. They're slowing down, and they're like, okay, I need to position this to where I make sure everybody I want gets a part of it. And let's say they have 10 beneficiaries, and let's also put that one of them is special needs. So what they had done when it was brought to my attention is they've worked with an attorney, and the attorney, and they brought this up. So, well, you know, if you name an IRA beneficiary as a trust, that's kind of a taxable event. And the attorney said, no, we've got some special wording in here that avoids that. Well, I call BS right there is kind of what goes off on my radar. And so they have that structured. And then the other thing that comes up, people will say, you know, I've already spent a bunch of money on this and you're telling me it doesn't work, right? I said, here's the thing. It's going to work how you've set it up to work, but it is still going to be a taxable event. Now, you're going to be dead and you won't know, but your beneficiaries are going to take a tax hit on that situation. And by the way, I believe trusts are taxed at what tax bracket?
The max tax bracket.
The max. That's what we don't want. And it's okay if you're leaving it somebody and they want to cash it. Okay, that's on them, on their tax bracket. But to have the whole thing, and let's say, you know, and it's not out the norm for somebody to have 3, 4, 500,000 or $1 million in an IRA. That's a lot of taxes coming out there.
That's tough. You're right. And I think a lot of folks, you know, they do get a bit of misinformation. And look, you know, attorneys aren't infallible, right? We like to solve problems, but knowing your boundaries is very important as well. Knowing, hey, I can surely set up a trust, but man, I really need to know the ins and outs of IRA regulations. And maybe that's not something I do every day, which again, you know, really underscores our relationship and the fact that you and I can text each other about questions and have it answered within a matter of minutes before we step in a pile of things we don't want to step in.
Yeah, it's just that taxable bit right there. And one of the things I explained in that situation that was similar to what I'm describing, and it's not, this isn't out the norm. I have this discussion often from a customer service standpoint. We want to make sure people understand what's happening in a situation. Like if there's a taxable event, how do we avoid that? So I go through that and explain that to them, that it is a taxable event. It's going to happen no matter what the wording is, because a key thing, an IRA cannot be owned by a trust. It has to be owned by a human, and you should have a human as the beneficiary, or it's a taxable event. We're going to stay on this subject a little bit longer when we come back, and then there's probably a few things you have in mind that you keep hearing a bit about, want to talk about. So if you've got a situation, not sure what to do, need some help with that trust or how to leave money to your family, give us a call, 504-260-0995.
We are Winning at Life with Gregory Ricks.
I've got 3 basic core rules. The first is avoid losing money. My second is have your money making money when it should. And then the third rule is the return of your money is more important than the return on your money.
Gregory Ricks and Associates, 504-832-9200 or GregoryRicks.com. Investing involves risk, including the potential loss of principal. Investment advisory services offered through AE Wealth Management, LLC.
Mortgage Gumbo with your chef, Dwayne Stein.
I would never hesitate to ever call them for anything else that we need.
And I can't say enough good things about Dwayne Stein and his people at Mortgage Gumbo.
I will never, ever do anything as far as a mortgage is concerned without contacting Dwayne Stein and his group. Again, first.
Mortgage Gumbo with Dwayne Stein. 2 servings every Saturday, 9 a.m. and 1 p.m. on News Talk 99.5 WRNO.
If you like money, you'll love the Winning at Life app. On the Winning at Life app, you can hear the Ask Gregory podcast, where you'll find episodes based on a financial topic. So if you're looking for help on a specific situation, there's a good chance you'll find it on the Ask Gregory podcast, including episodes on 401ks, taxes, stocks, Social Security, gold, and whether or not you should buy an RV. Hear the Ask Gregory podcast on the Winning at Life app, your wallet's favorite app.
Less than half of Americans have drawn up a will. If you don't have one, you know you need to get one. But what if you do have a will? Is it up to date? Has anyone in your family been married, divorced, or passed away? Have any new family members been born or adopted? Don't leave your loved ones in a bind. Call me and we'll make you a plan or update your existing plan. Hi, I'm Wes Blanchard, an estate planning attorney in Metairie. What's your plan? Find me at wjblanchardlaw.com.
The Ricks Report with Gregory Ricks.
At the core, I always tell people, I'm not here to make you rich. I'm here to make sure you don't run out of money, that you don't run out of income. That's how I look at my job. Over time, saving, making good decisions can make you rich. But what you have is, what is your core thing? Your core thing should be making money. And your core thing, you should set aside money to work elsewhere. It doesn't necessarily mean you have to put it to risk. You could put it to safety. But your core thing makes you money. Or you tell me your core thing is the market, day trading, or gambling in the market. It shouldn't be. You should have a core thing that makes you money, and you peel some off for the future when you're done with your core.
Winning at Life with Gregory Ricks. Find us on the Winning at Life app or winningatlife.com. Investment advisory services offered through AE Wealth Management, LLC. Investing involves risk, including the potential loss of principal.
I know everybody says money can't buy happiness, but it can buy me a boat. It can buy
Hey,
me
y'all.
a truck.
Winning at Life, live financial news talk radio, the show that will help you improve your financial decision making. You know, one of the things I talk about at public events is estate planning. You know, in the guided planning system, our trademark strategy sessions we go over with you, there's kind of 5 core areas. Income planning. There is no retirement without income. Tell me, how do you retire without income? A plan for that. So one, we talk about that. That covers Social Security, IRA distributions. It's kind of the thing, will my money last? Well, it'll help if you have that plan. Investment planning. You know, are you going to be 100% in stocks? I'm going to tell you, history shows that that doesn't go well. You know, and sometimes I hear people say, well, you know, history repeats itself. No, history does not repeat itself. Humans repeat themselves, and they repeat making bad decisions. So investment planning, if you want that to work better, you need to diversify. You need multiple asset classes. And actually, I believe the Invest 50/50 is a much better way to invest. We're talking about increasing opportunities. Another area, healthcare. You know, this PhD spent his life's work on researching retirement. And one of the things, there's an article on my blog, basically him talking about, what did I find out when I retired? And I'll tell you, the most aggravating thing he said the most aggravating thing about retirement, it's called Medicare, sorting through that. So we help you on the healthcare side. And the other thing is, if you live long enough, you're probably going to need some help on the back end. That falls under the healthcare side. Taxes. Yeah, they're going up. You probably should get some help or guidance and get some of our analysis and reporting that we do on that side. And the other, estate planning, what to do with your stuff. And I think there needs to be a plan for that. It doesn't have to be complicated. It can be. What gets really complicated is when you don't have one, right, Wes?
That's it.
Then you get a lot of attorneys involved. But the core is family getting along. And I think that's important. So that's why that's one of the 5 pillars. There's a talk I give a lot of times when I publicly speak. And one of them is, my mom's story. And it was a key influence into how we do planning. And on the back end of her life, she did not have documents. No matter how many times I asked, it never happened. And one of my sisters, I would talk to her about it, and it just never happened. So Mom was in hospice. She didn't have much time left. One of my sisters wanted to go a different route. And I'll just say she probably maybe was wanting to punish mom a little bit for whatever reason that was. And we were sitting having a conversation bedside, and I just leaned in and I said, this ain't going to go how you think it's going to go. You could tell she started boiling there. And my other sister said, you could have handled that a lot better. It's okay. Here's what I want to do. I want to go out to the cemetery in a little while, and let's just walk around, look at the plots that she owns, and talk about it. I shouldn't have had to have a conversation. It should have been documented, and that would have taken care of it. But we did go out and have a talk, and we all agreed to follow mom's wishes. Why? If you bury them and change your mind later, that's kind of tough to undo. I would hate to have that regret, and that's how I got them to do what she wanted. But to me, and the other thing I always talk about, and you hear this, Wes, when that money gets on the table, what happens?
Everything starts to change.
Yeah. Lots of disagreements out there. Okay, so if you've got some questions about estate planning, 504-2600-995, and I'll help you out on that. But we have the guy that you need to talk to here is Wes Blanchard. And if you don't, you can reach out to my office and we'll connect you up next week. If you say, well, I've got some questions. Well, call the office. We'll help you, financial or estate planning. We'll get those questions answered for you. But reach out to us now, 504-2600-995. Okay, so at the core, you want to leave a named beneficiary on an IRA. Let's say you've got 10 grandchildren. I don't like my kids anymore, but I love my grandkids. I want to name them the beneficiaries. The key to that is don't say, I leave everything to my grandkids, because then that creates a large pool. That doesn't work, because what they'll do is they'll base it on the older one, and that's going to create a big taxable event. You're not going to like that from the pooling standpoint. And if you're working with somebody that knows what they're doing, they're going to want the name of each beneficiary, and they're going to want their date of birth. They're going to want some information about them so that they are named beneficiaries. Because when you have it structured that way, it's going to, and here's how it works. So you've left a few named beneficiaries on your IRA. You pass. What's going to happen is we set up and we use Fidelity where we custody at. So we go to Fidelity, get some paperwork done, and set up a Fidelity account for each of the 5 beneficiaries there. And then those funds, proportionally, if you said, well, each 5's getting 20%, so that's 100%. So we would move 20% of the funds into each account, and now they have that IRA. And we're kind of referencing non-spouse beneficiaries. If they're not a spouse, they're going to have to take that money out over 10 years. If they're a minor, it doesn't start till age of majority. So we'll just call that, make that simple here because it varies by state. Let's just call it age 18 here. So the 10-year clock would start ticking at age 18. So year 10, they have to have all the money out. And this is whether it's a 401k, IRA, or Roth account. So then the complication comes in. Well, Junior, I don't know. He might go buy too many fast cars with the money or something. I don't trust him, or he has other issues and might not make good decisions. That is kind of a problem in this world. And the other is Jimmy has trouble. He cannot take care of himself. He's slower than the rest. So and he's getting aid. So how do I avoid him getting into that money impacting the aid that he gets?
Yeah.
I know I gave you a lot on the plate there. So your thoughts?
Yeah. Well, I think certainly the last two that you mentioned, right, are really going to be what triggers consideration of a trust. Someone who might squander the money. And again, going back to the first segment, you're going to get hit with the tax bill. But sometimes you look at that and you say, hey, that's a worthwhile move there, because now, yeah, I might have to skim a little bit off the top, but the ability to preserve it is really what I'm trying to do in the first place.
Yeah, if you're trying to even that out, let's just go back to the 9 plus the 10th one's a special needs situation. And so, well, the special needs situation, that is going to be a taxable event because it's going to go into a trust. And if you're trying to want an even or consideration of them, you've got to adjust your balances there. But you can have the other 9 go directly to an IRA for them and each get their own portion in their account because they're named, and it's not taxable at that point. But Jimmy that needs help, his is going to be taxable, but it protects his benefit because it doesn't go to his name. So is it difficult to do that trust just for him?
No, it's not. And just for the people who aren't clear, what Gregory's referring to is a special needs trust, right? And these are set up for folks who are receiving government aid for some sort of disability or infirmity that's really impacting their life, and they're getting some assistance. Well, if you don't structure it properly, if you have a large sum of inheritance that comes in, you're going to get kicked off of that aid. They're going to say, look, go spend that inheritance and then come back and reapply and we'll start this thing over. But most folks don't want that to be how their inheritance is spent, right? You want that inheritance to help bolster the quality of life, not necessarily become its core component, financially speaking. And so you set up the supplemental needs trust, you set up the special needs trust, and it allows that money to be doled out at the trustee's discretion. And when you do it the right way and you make sure you don't spend it on benefits that are otherwise already provided, then you're able to really kind of hand that money over to the heir or for their benefit in a way that doesn't disqualify them from the government benefits that they're receiving already.
So if there's no money going into this, so what's the situation? Does the trust special needs need to be set up in advance, or can that all of a sudden happen at death, that this money now comes available to fund it? How does and when does that structuring happen?
Yeah, they call it estate planning for a reason, right? You got to get out ahead of it. You can't do it after death has already happened. You have to have the plan in place.
Okay, so could you have a will or trust instructions set up and then it happens, or it's kind of put together, it's just not active because it's not funded?
That's a good way to put it. It really is triggered. You know, you talked about turning Social Security on. It's very much like that trust is triggered. It's turned on at the moment of death.
But the paperwork's already done.
Paperwork's done. It's sitting there. You can adjust it and change it and make all kind of different moves to it until you die. But once you've passed, now the trust is active, it's opened up, and it's ready to receive that money.
Can you make changes to that?
Once you've passed?
No, before.
Before, of course.
You can't after.
Of course.
Because you're not in decision-making mode anymore.
Sure,
But you can make changes to that before and how it's handled. And
absolutely.
Okay. Well, we're going to be right back. I'm going to go into that a little bit more. We have Thelma also lined up to take her question shortly. Give us a couple minutes and we'll be right back.
And you have time to speak with Wes, 504-260-0995. We're Winning at Life with Gregory Ricks.
You all are so good. I've listened to you for years.
Ask Gregory is a financial podcast from the guys who bring you Winning at Life with Gregory Ricks.
I am near retirement, and I wish I would have been listening to y'all for the last couple of years.
Learn the ins, outs, do's, don'ts, rules, and tools of the financial world.
I have a broker. He has no idea what you and I just talked about.
From your 401k to your IRA to your pension to your Social Security to your Medicare.
Hi, Greg. Appreciate your service to the community.
From your ETFs to your precious metals.
Your program helps to ground me. There's some personal, real life there.
Find the Ask Gregory podcast on the Winning at Life app, the iHeartRadio app, Google Podcasts, Apple Podcasts, and Spotify, and wherever else you can find podcasts, probably.
That's exactly what I needed to know. Hey, I love your show.
Investment advisory services offered through AE Wealth Management, LLC. The firm is not affiliated with the U.S. government or any governmental agency.
If you've been listening to Winning at Life for a while now, you probably already know that estate planning is more than just a will. You may need a trust. You definitely need both of your powers of attorney. So what's your plan? Hi, I'm Wes Blanchard, an estate planning attorney with offices in Metairie. Listen, don't leave your loved ones in a bind. Call me and we'll make you a plan or update your existing plan. Find me at wjblanchardlaw.com.
If you like money, you'll love the Winning at Life app. On the Winning at Life app, you can listen to the show live 6 days a week. And if we're not on at the moment, you can hear a replay of the latest episode of Winning at Life. Whether you're getting a late start on your retirement savings or keeping up with the financial news, Winning at Life with Gregory Ricks is there on demand. Hear the Winning at Life show on the Winning at Life app, your wallet's favorite app.
Most people think of Crime Stoppers as only a tip reporting line, but we're so much more. Crime Stoppers GNO has worked in our area schools, offering prevention presentations on trending topics from drugs, bullying, online safety, suicide prevention, and much more. And we have a high school teen leadership program which provides students with a first-hand look at the criminal justice profession as a future career, while learning to be an advocate for their fellow students. So to learn more, visit safeschoolsla.com or call 504-837-8477.
Fox News, I'm Carrot McHugh. Kyle Rittenhouse was acquitted of all charges, including murder, Friday in Kenosha, Wisconsin. Among those disappointed by the verdict.
Also in the courtroom, the loved ones of the two men killed by Kyle Rittenhouse.
We need to focus on what's most hurtful here to these people, myself included, which is the loss of life and the sanctity of life.
Now the jury deliberating for more than 23 hours here. The defense saying that the jurors had confidence this entire time because they just heard the facts of the case.
Fox's Alexis McAdams. Meanwhile, reaction from local business owners is one of relief so far.
This town has gone through so much that I believe that the people that want to protest will possibly do it peacefully, and hopefully that will be the case. Our small businesses can't take much more of anything.
Ann Benson owns a bakery in Kenosha. America is listening to Fox News.
Winning at Life with Gregory Ricks is a copyright of Down South Strategies for the private use of our audience. Any unauthorized use of this broadcast without express consent is prohibited. For podcasts, show information, and contacts to our sponsors, go to winningatlife.com or download the Winning at Life app. If you've got a financial situation and you're not quite sure what to do, you better call Gregory. We are Winning at Life with Gregory Ricks.
Winning at Life, live financial news talk radio. I'm your host, Gregory Ricks. Now, we're talking about that 10-year rule on IRAs. I want to be clear. A spouse does not have a 10-year rule. A spouse will have RMDs going forward on inheriting their spouse's 401k, IRAs, and so forth. But a non-spouse is what's under the 10-year rule. No matter what, you want to have named beneficiaries on your 401ks, your IRAs, your Roth accounts. Anytime there's qualified plans, make sure the beneficiaries are named. Don't just throw out one other thought out here. If you're a 401k and you've got your kids named as a beneficiary and you're single, then you go and get married again, you better go in there and make sure you have that beneficiary structured how you want it. If you go thinking, oh, I want to leave it to the kids, so I'm going to leave it alone, but you got married after you had named the children the bennies, and then you die, it's going to the new wife. Why? Because you didn't get a non-spouse beneficiary form signed. So this is something, this is part of annual review strategy processes of review these things every year. Reason to work with Wes and I on these cases for you. So let's take Thelma's call from Harvey. Hey, Thelma, welcome to Winning at Life.
Thank you. Thank you for taking my calls. I have a question to Mr. Leslie. This is between a deed, a real estate deed, and a will.
Okay, ask.
All right. So a deed was named in 2014, And then a will was to designate the beneficiary was written in 2018. So tell me or ask Mr. Leslie, what's going to happen if the resident or the person dies?
So if I'm understanding your question correctly, there was a deed made up that transferred real estate in 2014, and then there's subsequently a will that maybe transfers the same piece of real estate elsewhere, right?
4 years after. 4
Yeah.
years after, correct.
If the deed is executed, right, meaning the person sells or donates and the other person purchases or receives, and that's done in front of a notary and two witnesses, okay, that's an effective transfer. All right. Now you should also record it in the parish conveyance office, but that really just matters to third parties. That transfer is effective between those two parties on that deed if it's done at the time that it's signed. Okay. So if the will then purports to leave that same piece of property to someone else, well, guess what? He doesn't own the property anymore. So it doesn't really matter who he left it to at that time, if the deed was properly executed.
Okay, so therefore, so the deed was written or was done and recorded in 2014. And then, so, this is my sister. So because she wants to distribute the house, she made a will to distribute to 3 beneficiaries.
Yeah.
So now okay, tell me what's the ruling?
Yeah. So if she's already signed away her portion of the house or the entirety of the house, whatever her ownership portion is, if she's already signed that away in a deed, she can't then leave it to someone else in a will. She no longer owns it.
Okay. So actually when she made the deed, she owns her name and another person on the deed. And then she made a will 4 years after, designating 3 people. One of them is one on the deed. The beneficiaries is on one of the beneficiaries on the deed 4 years before that.
Yeah.
Is that confusing?
No, I understand what you're saying, but I think the same advice sort of rules the day, right? If the deed is properly executed, that's because it was done before, then the will can't supersede it. The deed is going to rule, okay?
Okay, so that overrules the deed overrules the will, regardless of when it was made.
That's right.
Okay, well, thank you very much.
No problem.
Appreciate it.
Thanks for calling.
Bye-bye.
Okay, so is there anything you want to add to that? Because, wills, I understand, are a guide for the court, but you still got to go through the court process. Orders have to be given, right?
Yeah, exactly. And I always stress it when you think about it, but when you have a will in place, it's along the same lines we were discussing with Thelma on the deed. You have to make sure it's executed properly. Notary, 2 witnesses, or if you're doing it yourself, you better be writing it in your own handwriting, date, name, signature, the whole bit, right? We've seen wills come in and they're missing a witness, or they're halfway, they pulled it off the internet, okay? So it's typed up and you got a date on there, and then you just sign your name on it and you think that's gonna hold up, and it doesn't, right? So in that way, you're right. It's a guide, but look, we still got to present this to a judge. And if the judge looks at it and says, Wes, that's not the form, and you know it, I'm not even going to present that, right? I mean, I'm not going to embarrass me or my client and present a non-valid will to the court. So this is why, you kind of want to get legal advice here, right? I don't recommend, and in fact, I spoke with a notary yesterday, and he echoed the sentiment. I wouldn't recommend going get a will done at a notary shop. Don't do it. Talk to a lawyer. It doesn't pay to be cheap at this point. I mean, you're really dealing with too many assets. This is your life's work.
What I think of that when you go online and just grab a will, and especially it's not designed for states, and all states don't work the same, especially Louisiana. Like if you compared Louisiana estate planning laws that are in place and Mississippi's, it's kind of like night and day difference. That key word is usufruct. And what is Mississippi's
life estate?
Life estate, but it's what happens between the husband and wife.
Oh, there's rights of survivorship. Right?
Yes, and what's mine's yours.
That's right.
Not yours and the kids. It's goes to the spouse. Then the spouse done. Then it goes there. But in Louisiana, it kind of like what's mine is all of yours, meaning the wife and the kids, right?
Right, and
simple,
she gets to use
simple
it,
way,
sure.
but it's complicated.
Yeah, and that's, it's a good point, right? Because when you look at Mississippi's laws, I think for the most part, the folks there are going to look at it and say, hey, that actually works out the way I want it anyway. It trickles up to my spouse and then down to the kids. Here, it's an immediate split in ownership and who can use it and who's responsible for taxes versus insurance. And now you're dealing with all of these things that, frankly, are more complicated than you ever would imagine, instead of just putting a will together and say, hey, I leave everything to my spouse. Or if you want, hey, I'll leave everything to the kids. You don't have to worry about how that relationship is going to pan out between those parties afterward. Just tighten it up,
Yeah, and so getting back to it's like the one size suit. Go there. Oh, it's a one size fit all. It's going to work fine on you, Wes. And you and I go buy the same thing, and it's not working for either of us.
Yeah.
No matter what state we live in, honestly, from that. So a will is not going to work like that, because what would be this normal situation? You use a one size fit all trust. I just can't imagine that. My world's pretty complicated. And let's just go back to the generic perfect family, husband and wife, marry, stay together their whole lives, and they have 2.5 kids. Okay. I guess that might do it if all state rules were the same, but they're not. So I just see where and we've worked together on these for years, but you could just see where mistakes are made. They put, and they try to eliminate usufruct, but they make it worse. Or they did good, but then they added something onto a sentence, and that just you might as well not even bothered. And I'd say the only time to do and we're talking about holographic handwritten wills, is like you just need to get something down quickly in case something happens before you can see Wes in a few weeks, if you've got those type of concerns right there. But from that standpoint, we're about to go to break, but can this will can get put together and be legal and valid pretty quick, right?
We have what's typically like 1 week turnaround time. We've had folks that come in on Monday and sign their documents on Friday.
Well, heck, we don't need an holographic will. We just need to get in and see you.
You just need a little bit of time. That's all.
I hear you. Wait, what's a good way for them? We've got another segment, but I want to get in a plug for you here. How can they reach you?
You can go to WJ Blanchard Law. You can also call Gregory Ricks' office. He'll put you in touch with us, obviously. 504-832-9200 on that one.
Yeah, we're setting you appointments all the time at the office. Okay.
All right, 504-260-0995. We are Winning at Life with Gregory Ricks.
Mosquitoes. We know them as flying, blood-sucking pests, but did you know that mosquitoes are actually highly intelligent? They can smell human breath, our sweat helps them choose their next meal, and they use our body heat to find just the right place to bite. Outsmart mosquitoes with help from Mosquito Joe. Mosquito Joe has this time-release capsule that they spray that slowly releases its mosquito death over a course of a month. NewOrleans.MosquitoJoe.com. NewOrleans.MosquitoJoe.com.
If you've got a financial situation and you're not quite sure what to do, you better call Gregory.
People with a lot of money fall into schemes and such. And that's whether somebody calling you on your phone or sending you an email, hey, you won the lottery, send me $3,500 so we can process it. That's what you've got to be careful for on these get-rich ideas. There's no magic bullet out there. If you can do time travel, then okay, there's probably some opportunity to jump back and grab Apple at $2 a share, or start helping Bezos in his garage. And one of the things is have somebody you trust to bounce these ideas off of. And when they tell you it's a bad idea, you might should take them at their word for it.
Gregory Ricks and Associates, 504-832-9200 or GregoryRicks.com. Investing involves risk, including the potential loss of principal. Investment advisory services offered through AE Wealth Management, LLC. Ask Gregory is a financial podcast from the guys who bring you Winning at Life with Gregory Ricks.
My mother just inherited a couple of annuities.
If you could explain the difference between a government pension offset and the windfall elimination provision is.
You now make too much income to contribute to a Roth IRA.
Find the Ask Gregory podcast on the Winning at Life app, the iHeartRadio app, Google Podcasts, Apple Podcasts, and Spotify.
You all are so good.
Investment advisory services offered through AE Wealth Management, LLC. The Ricks Report with Gregory Ricks.
My age that I can claim Social Security is 66. If I wait to 67, I'll get an additional 8%. But you have to wait the full year. Do they prorate it like if you do it at 66 and a half, do you get 4%?
You get a credit for each month you defer. And here's a little technicality. Delayed retirement credits don't get calculated and applied till the beginning of the next calendar year. So if you're deferring and getting delayed retirement credits and then you turn it on middle of another year, those delayed credits will be factored in the beginning of next year and made up for what you didn't have and paid at that higher rate at the next calendar year.
Winning at Life with Gregory Ricks. Find us on the Winning at Life app or winningatlife.com. Investment advisory services offered through AE Wealth Management, LLC.
I'm a lonely dreamer on a highway in the sky.
Hey, y'all. Welcome to Winning at Life. We've got another hour coming up. And you want to know who the guest is? Me. I'm going to be here to take your questions. 504-2600-995. I always have a lot on my mind. And we're going to clean up here a little bit on this state planning regarding special needs trust. Now, once again, I'm going to clean up here a little bit. It's a lot, and Wes and I are going to, and we're talking about working together on creating a YouTube podcast, a special segment that we're going to probably have in length under 30 minutes to really drill down on this to help everybody, from individuals to attorneys to what people need out there to make sure they get this right. Now, you can't assign an IRA to a special needs trust, but you can name a special needs trust as a beneficiary of your IRA. In this way, after you die, withdrawals from the retirement account will be paid to the trust for the benefit of your child. And yes, required minimum distributions will come into play. That's because your IRA, after you die, would become an inherited IRA, and your special needs trust, if named as an IRA beneficiary, would be required to take distributions from that account. But here is where your child could catch a break. As you might recall, the Secure Act enacted in 2019 ended the so-called stretch IRA for many heirs. An adult child, for instance, who inherits an IRA from a parent is now required to withdraw all the money from the account and pay taxes due within a decade of the parent's death. But the Secure Act also identifies several groups of heirs who still can stretch distributions over their lifetimes, including individuals who are disabled or chronically ill. If before you die, and this is what we talked about earlier, before you die, you set up a special needs trust with your disabled child as the beneficiary. And if you name the trust as the beneficiary of your IRA, this would allow the trust to withdraw funds from the IRA over the life expectancy of the child. In effect, you restore the stretch IRA option. Now, to be specific, To take advantage of the stretch IRA, your trust would need to qualify as an applicable multi-beneficiary trust, which Congress created as a part of the Secure Act. We don't have enough time left on the show to get into all this detail, but that's why you would call Wes Blanchard about setting up a applicable multi-beneficiary trust, which Congress created for the situation. So in essence, we're not, yes, the IRA is going to still be taxable to the child's trust, but it doesn't have to be at once. It doesn't have to blow it up. And I know that's a lot there. We are going to tackle this and create a podcast that's going to focus on this topic here in the coming weeks. So with that said, we've got more callers.
504-260-0995. Elizabeth in Metairie, you're on with Winning at Life with Gregory Ricks.
Hello, can you hear me?
Hey, yes.
Okay. I have a question about a living will. Actually, two questions about one. My mother has a living will, but she puts it all on pieces of paper. It has not been legally documented. Would it classify as anything?
So when you say a living will, you mean one that's controlling end of life decisions and, you know, how she wants to be at the time that she passes? Yeah. Okay. Just want to distinguish.
No, but wait. Right, no, but the thing is, I'm sorry, I don't mean to cut you off, baby. The thing is, were her assets, her end of life, like her financial stuff, like all that is in that thing, in that living will. She doesn't have a will, but she has her own will that she read out, handwritten herself. So how would that work?
So it sounds to me like what she's trying to put together is more or less a power of attorney, more than a living will. Is that accurate? Because if I'm hearing you right, she's designating someone to control that stuff as she's sort of, you know, reaching that end stage. Is that right?
No. Say you're her son and I'm her daughter and we have 5 other siblings. She says, I want the car to go to this one. I want the shoe to go to this one. This one, this one, this one, this one, this one gets whatever. You know what I'm saying? Do you understand? Not like any particular item. She doesn't have she just has specifics. But she all told us what she wants, but she just has it written down what everything is going to.
Mm-hmm. Yeah, so that's what I was getting at the front end. So that's a will, right? A living will is a different document that handles medical decision making at the end, right? So what you're dealing with is just sort of an holographic handwritten will that Gregor and I were discussing a little bit earlier. Now, I don't know exactly what form she's got. It sounds to me like she may not have even put it all on the same sheet of paper, right? But the most important thing that she should consolidate that and say, hey, look, here's my will, my own handwriting, my name, a date, and here's who I want to get these items. 2 things to note based on what you're telling me. Okay, if she's just one of the folks that, you know, and a lot of my clients tell me they do this kind of thing, but they stick a sticky note underneath the lamp or whatever it might be, and this is going to that person, that's not going to hold water. Okay, so that's
not going to go how you think.
Right. That's not going to hold up. But the other side to think about too, Elizabeth, is if you've got just a list of things, right? And let's say it's 15 items long. Well, the rest of things that are not listed get split evenly, you know, and that might be a lot more than you actually think, right? You might think all the bases are covered, and sure, she's got the big assets, but there's going to be value in all these other items that aren't specifically listed. So, you know, I really, again, I would recommend her sort of consolidating all that at least to one piece of paper, dealing with the specifics, and then dealing with whatever's not specifically listed as well.
Okay, let me ask you one more question. It's regarding a living will. Me and my spouse has been together 19 years. We are not married due to certain situations. He has a daughter. He's about to go have a procedure done in the hospital. And the nurse talks to me, does he have a living will? And I said, no, but he needs to make one. Can he just handwrite one without getting notarized or witnessed?
So again, we're still talking about like a testament, right? A regular everyday will where he's disposing of his assets?
Or is this
And
whether or
given
not
kinda like
he's
a
going to be
power-
put on life support if something happens
Right.
surgery?
Yeah, because I don't have any power of attorney. I don't have no legal documents on him.
Mm-hmm.
And then his daughter would step in. And like I said,
She has
I've
no
been telling
say.
him for years.
Is what this is about.
That's right.
You
Yeah.
have no say if something happens to him and they need a decision made.
Right, because you're not technically next of kin, right? And the only way you're going to get that is through a power of attorney. And that needs to be notarized by mandate, by law.
Yeah, you need to get a document, legal document.
Yeah, I've been telling him. And
Okay.
he's going into surgery on Monday. So, but thank you for answering my questions.
Yeah, of
course.
I appreciate it.
Wish him the best of luck.
Good luck
All
on
the
that.
great advice.
Okay.
I appreciate
Let's take Kenny next.
All right, Kenny, you're on with Winning at Life with Gregory Ricks.
You there, Kenny?
Yeah, hello.
Okay. Welcome to Winning
I
at
have
Life.
a quick question for you. Yeah, I have a quick question, Gregory. I was a farmer my whole life for 40 years, and I don't have any 401ks, but I invested in life insurance policies whole life, and I have a couple $100,000 worth of cash surrender value. But in Louisiana, you lose about 50% of that with the taxation. So I was wondering if you could tell me an instrument that I could transfer them to that might help me out on that.
Why are you losing 50% because you're in Louisiana?
Well, you got the federal tax, and then you have the state federal tax.
Well, as far as your cash values are taxable, if you were to cash the account, it's taxable above your cost basis. So if you spent $100K and took $200K out, you'll be taxable on the $100K. But depending on how that life insurance, if it's MEC or non-MEC, it could become an income tool. Also, you can move money out of that life insurance into an annuity. I like fixed annuities because we don't use risk on fixed versus variable. But you can move that money from that life insurance policy to an annuity, and it's not a taxable event, but you will have taxes on distributions above that cost basis, and it's LIFO, last in, first out. Hopefully that helps, and if you have some questions, and I think you should, call my office, 504-832-9200. Go to GregoryRicks.com. We can help.
We are Winning at Life with Gregory Ricks.
Investment advisory services offered through AE Wealth Management, LLC. Winning at Life with Gregory Ricks is for informational purposes only and does not recommend the sale or purchase of any specific securities, investments, legal advice, or tax advice. Investing involves risk, including potential loss of principal. Raw conversion is a taxable event and may have several tax-related consequences. Be sure to consult with a qualified tax advisor before making any decisions regarding your IRA. The information and opinions contained herein are provided by third parties and have been obtained from sources believed to be reliable, but accuracy and completeness cannot be guaranteed. Neither AE Wealth Management nor advisors providing investment advisory services through AE Wealth Management recommend or facilitate the buying or selling of cryptocurrencies. The firm is not affiliated with the U.S. government or any governmental agency. The firm offers insurance services. We are Winning at Life with Gregory Ricks.
From the Gregory Ricks and Associates Wealth Management Studios, WRNO FM, New Orleans, an iHeart radio station.
More protests are planned. I'm Pam Huso, Fox News, and the hope is they'll stay peaceful. Yesterday, Kyle Rittenhouse was acquitted of murder and other charges in Kenosha, Wisconsin. The verdict brought protesters to the streets across the country. President Biden expressed concern in a statement.
The reason that he put out a statement saying that the verdict is the verdict and we need to accept the verdict is it was a chance for him to call for calm, which for the most part, as we've seen in our reporting, things have largely been calm. Vice President Harris was in Columbus, Ohio yesterday for a separate event. She was asked on the tarmac before boarding Air Force Two about this verdict, and she gave a much less measured response expressing frustration. But the president seems to have some frustration with this verdict, but said we have to accept this verdict.
Fox's David Spunt. A high-profile murder trial in Georgia is expected to wrap up next week. 3 white men are accused of killing a black jogger.
The defense did rest their case, calling only 7 witnesses to the stand, one of which being Travis McMichael, the first of the 3 defendants on trial here to speak publicly since Ahmaud Arbery was shot and killed. On the stand, McMichael testified that he and his father spotted Arbery running in their neighborhood and recognized him as the same individual who was seen on a neighbor's property days prior.
Fox says Charles Watson. McMichael said he only planned to talk to Arbery when he confronted him, but that he was forced to shoot Arbery when the unarmed man attacked him. It appears the Thanksgiving getaway has already started. The TSA says more than 2.2 million air passengers were screened at checkpoints yesterday. That's the highest volume since March of 2020, when the coronavirus pandemic crippled the travel industry. Over the last few days, major airlines have predicted an uptick in travel. America's listening to Fox News.
From the Fox News Podcasts Network.
Hey, this is Trey Gowdy, host of the Trey Gowdy Podcast. Every Tuesday, you'll hear what's on my mind. Plus, every Thursday, there's a special bonus episode where we answer the questions that are on your mind. Make sure to spend your Tuesdays and Thursdays with Trey. Subscribe now at foxnewspodcast.com or wherever you download podcasts. Hope to see you.
America's listening to Fox News. From the Fox News Podcasts Network, the Fox News Rundown, a contrast of perspectives you won't hear anywhere else. Your daily dose of news twice a day, going far beyond the headlines, tapping into the massive reporting resources of Fox News to provide a full picture of the news of the day.
I'm Dana Perino.
I'm Brett Baer.
I'm Jessica Tarlov.
I'm Chris Wallace, and this is the Fox News Rundown.
Subscribe and listen now by going to foxnewspodcasts.com or wherever you get your podcasts.
If you ask Democrats about President Biden's giant social spending package, they'll tell you it's fully paid for. But House Republican Jeff Van Drew of New Jersey says it's going to cost more than the president ever told us.
A lot of these programs have been shortened to make a smaller price tag for it in the immediate future. However, in a couple of years, these programs are going to have to be renewed. And very often when a program is put in place, as you know, it always gets renewed.
Democrats argue enhanced IRS tax enforcement will make a big difference.
When people pay their fair share, how much will the IRS really be able to collect? I believe, I've talked to many economists outside of the CBO, that when people are really going after people and paying their fair share, that we will be able to collect that money.
Congresswoman Debbie Dingell of Michigan, both lawmakers appearing on Fox's Cavuto Live. Ohio has a new map of congressional districts, and Democrats don't like it one bit. Republican Governor Mike DeWine says the legislation he signed today makes the most progress to produce a fair, compact, and competitive map. Democrats call the process unfair, partisan, and cloaked in secrecy. The map will be in effect for the next 4 years. A nonpartisan group gave the map an F grade. If it's going to snow this winter, you might as well have fun with it.
Captain Snowpants, Yo Bro, No Snow, and Jennifer Snowpez. Those are just some of the names chosen by Vermont's children as part of the state transportation department's Name a Plow contest. The DOJ vehicles are a big part of keeping the New England state running when Old Man Winter blows in. The full list of names includes Snow Be Gone Kenobi, Burrito, and of course the obligatory Plowy McPlowface.
Fox's Tom Graham. I'm Pam Puso, Fox News.
Hey, James Parker here from Winning at Life. Something that's come up on the show over the last 10 years is that if you're not at your old job, maybe your 401k shouldn't be either. But do you really know why we say that? It's a funny thing. We put a few $100 in our 401k every month. It ends up to be thousands of dollars every year, hundreds of thousands of dollars over our career, and you don't really know that much about it. How do you invest it? How do you diversify? What do you buy? What do you avoid? You've got a financial situation and you're not quite sure what to do? Ask Gregory. Ask Gregory is our new podcast with these financial topics broken down into specific little chunks. So if you have a financial situation or you just want to learn more about money, Ask Gregory. Find the Ask Gregory podcast on the Winning at Life app, the iHeartRadio app, Google Podcast, Apple Podcast, and Spotify.
And I want to thank you for all of your help.
That's exactly what I needed to know.
Investment advisory services offered through AE Wealth Management, LLC.
Hey, y'all. Welcome to Winning at Life, live financial news talk radio. Yeah, you know, this is the money show. We're going to help you improve your financial decision-making, tips and tricks of advancing your wealth, keeping more of your money. I'm going to share with you a little bit from our first 2 hours. Got some tips there we picked up with some contributors that joined us earlier. And I'm going to talk to you a little bit about the Invest 50-50 concept and what do I see coming? And that's always the question. That's the worry going forward is what's coming. And you know, what's the real problem with investing? The risk? No, it's the going down part. That's what, you know, when I publicly speak, and I'll say, like, what's the problem with investing? Sometimes I'll get a unison feedback like, yeah, it's the going down. Exactly. The risk of money going down in value. And maybe you worry too much, and it might be because you're overweighted in certain things you shouldn't be. What do I mean? You have too much in stocks. There you go. That's it. We're going to talk about having more balance with that today. If you'd like to join the conversation, it's easy. Call us 504-260-0995. You can reach out to us through the Winning at Life app, email, text, call the show through the app. Look, I'm going to recommend you download it anyhow so you can become a part of the Winning at Life Nation. Why? To download it, to set up access to the app, you're going to give up a little bit of information. It's called your email address. That way we can send you newsletters, keep you apprised to what's going on. Nothing else other than that, just to become a part of the Winning at Life Nation. Another way to connect is just go over to Facebook to the Winning at Life page. You can watch the show, friend, like us, those social things. We're on other platforms as well. My personal page is over there as well that you can connect to as well. You call into the show. It's easy. We're only going to use the first name of the name that you give us. It doesn't have to be your situation. It could be you're calling for a friend as well. And we're going to do our best to give you some help, some direction, some guidance. And once again, through the app, you can email, text, call through the app. If you're wanting direct connection to the show, the phone number, 504-260-0995. You want to email directly, which connects to my firm, my day job, info@gregoryricks.com. My day job is Gregory Ricks and Associates, the Total Wealth Authority. I've been advising and helping people with their money and decision-making for in excess of 30 years at this time. So it's all I've done for a long time. A lot of vast experience on that. And ultimately, it's not about having some secret ETF or knowing how to buy the perfect stock or when to buy in, when to sell perfectly. There's no such perfection out there. What we have, honestly, is probability and decision making. We want to increase the probability of success, and we want to make better decisions. let's see, from my weeknight show, I've got a couple of thoughts right here. I'll share three things with you. We'll be coming up on a break here in about 3 minutes, I guess. 3 best ways to invest for retirement. Number one, and I had a caller call in, he's 27 earlier this week on the show, and he's like, what do I do to get started? I said, well, heck, I've got 3 tips for you right here that I was wanting to talk to everyone about, and that's what I'm going to share with you today. Number one, the early bird. Ideally, you've started investing for retirement early. There's lots of reasons to delay saving for the future, but it's important to get started. Even if you've waited, it's never too late. You need to get started. You need to start yesterday, but if you didn't, start today. Well, why should I save? You don't have to have a reason. You need to save. Get an emergency fund that you are comfortable with. I probably think you should have more, but let's put it as that you're comfortable with. Then start investing. And why invest and have an emergency fund? Why? I don't want you to interrupt compound interest or compounding growth. That's the magic. Never invest in a way that kicks you out of it or causes you to exit or to lose it all. Why? Then you would have interrupted compound growth. One of the best ways to save, and Uncle Sam helps you with, is traditional tax-deferred savings. What is that? 401ks. Tax-deductible IRAs. For starters, your employer deducts the amount automatically from your paycheck, making it convenient for you to save for retirement using a 401k. You can also have the funds taken out pre-tax, meaning you get immediate tax savings. Employers typically will match your money up to certain limits, and so that could be like 50% contribution to your 401k. Then your investments grow tax deferred, meaning you don't pay taxes until you take the funds out later. This right there is one heck of an advantage for investing and retirement. Number 3, while traditional retirement or plans offer immediate tax savings, a Roth 401k or Roth IRA doesn't give you that benefit. However, these plans allow you to withdraw your funds at retirement tax-free, and both allow your investments to grow tax-deferred. So you could not get that little tax perk now, but you can contribute to plans after tax, grow it tax-deferred, take it out tax-free. And I think those really give you 3 advantages, knowing that we've got 3 tax worlds: pre-tax, after tax, and tax-free. And try to get your money in all those areas, which gives you efficiency in distribution after you've let this compound 20, 30, 40 or more years. Hopefully that helps you win. We're going to jump to a break here. When we come back, we're going to talk to Jim over in Waveland.
504-260-0995. We are Winning at Life with Gregory Ricks.
Gregory Ricks here. If you would like some help, have some questions, we're setting up 15-minute phone calls, and we're setting up online meetings with offices in Metairie, Mandeville, Gulfport, and Baton Rouge. But wherever you're at, you can reach out and get some help. GregoryRicks.com, 504-832-9200.
Investing involves risk, including the potential loss of principal. Investment advisory services offered through AE Wealth Management, LLC.
What's cooking, Gumbo Nation? This is Dwayne Stein. For 7 years, listeners have allowed me to be their voice to providing education and options weekly and become a trusted resource for their home financing. I want to do that for you. The hardest part of my job is trying to right other lenders wrong. So don't get schmuckatelli. Visit snapsendandsave.com. You deserve better, and let us get it right for you the first time. Visit snapsendandsave.com.
If you like money, you'll love the Winning at Life app. On the Winning at Life app, you can hear the Ask Gregory podcast, where you'll find episodes based on a financial topic. So if you're looking for help on a specific situation, there's a good chance you'll find it on the Ask Gregory podcast, including episodes on 401ks, taxes, stocks, Social Security, gold, and whether or not you should buy an RV. Hear the Ask Gregory podcast on the Winning at Life app, your wallet's favorite app.
Half of estate planning is having a plan put together for your loved ones when you pass away. The other half of estate planning is dealing with someone else's plan when they pass away. Sometimes they have a great plan, but sometimes you need a little help. Don't leave your loved ones in a bind. Call me, and we'll make sure you have a plan. Hi, I'm Wes Blanchard, an estate planning attorney in Metairie. What's your plan? Find me at wjblanchardlaw.com.
The Ricks Report with Gregory Ricks.
To determine if your Social Security will be subject to taxation, you have to be aware of the provisional income levels. The following forms of income figure into your provisional income calculation. And the way we get to that is 1/2 of your Social Security income, any distributions taken out of your tax-deferred accounts like IRAs, 401ks, any 1099 or interest generated from your taxable investments, any employment income, any rental income, and get this, interest from municipal bonds, those have to be figured in to determine if Social Security is going to be taxable.
Winning at Life with Gregory Ricks. Find us on the Winning at Life app or winningatlife.com. Investment advisory services offered through AE Wealth Management, LLC.
Yeah, you can find us where the party's at. This is how we roll.
Hey, y'all. If you have some old money, you mean old money at the old job, wouldn't be new money, but you have money over there at that job you no longer work at, or you think this is maybe about to become an old job. What do I do with my money? I've got 5 ideas for you. Go to GregoryRicks.com/401k, and that can give you some help there as far as some options. Because I don't know, do I want to leave my money where my old job was? I'm not a fan of that as well. If you want to join the conversation, here we are, 504-260-0995. What's important is there's other people wanting to hear it. And I'm going to be nice and friendly with you. It's a good experience to call into the show, and it helps others. Once again, 504-260-0995.
Jim in Waveland, you're on with Winning at Life with Gregory Ricks.
Yes. I caught the end of the conversation about the special needs trust, and I have a son that has special needs, and we were advised that to put the money in a state trust first, and then have a special needs trust to put money in periodically as he needs it. Because if you put all the money in the special needs trust, when he dies, the state takes back all the benefits that they gave him from that trust. Is that correct?
Wes Blanchard was here with us the past hour, and ultimately I'd probably want to connect you and him together next week to get into that. But the purpose of a special needs trust is to segregate that money from that child. That money's not going into that child's name. So
Right.
that's
Exactly.
that's the purpose of it. Otherwise, then why do you need to go through the legal process? If it's going, the special needs trust is going to mess things up for the child, then why do I need to pay an attorney some fee to set that up if it messes things up anyhow? So that's the purpose of segregating those funds and doing it in a
No, I'm not
way
saying it.
that you don't want, however, whatever it is that might go to the child when you die, that is fixing that. And you may have a trust that handles your stuff, but however that's handled, and you could have two layers where your stuff goes into a trust, but what's supposed to go to that child from your estate or whatever other trust, but what goes to the benefit of that child would then go into a special needs trust. And if you have other children or other beneficiaries, that trust would handle the shifting of those funds. Like we were talking about IRAs earlier. And from that standpoint, is you want to name beneficiaries of the IRA. If you trust those people to take care of the money and they'll do good things with it in the future, you don't have a problem making them direct beneficiaries. You just don't want to name that special needs child as a beneficiary of that IRA. You want to name a special needs trust, and it does have to be structured in a certain way for that to work with an IRA. So that's kind of what we were talking about in the last hour.
Right. I mean, I understand that, and that's what we're doing. But our accountant said, don't put it all in a special needs trust right away, because if he dies, because he's the only beneficiary, he's our only heir. So when he dies, that money can be taken from the special needs trust and given back to the state for all the benefits he received.
Yeah, I can't answer to the legality of that, because sounds like kind of a clawback situation. And you're calling from Waveland, so we're probably talking about the state of Mississippi, and that's where I would rather Wes that knows that environment and the clawbacks, and if the state has enacted some rules to stop the workaround, in fact, because that's what we're doing, is utilizing a special needs trust to work around and help those benefits so that they don't have all the money and goes that. So I can't answer for that, but it's not surprising that some of those things would come into play from that standpoint. Now, is this qualified money, or is this your general wealth, like your house, cars, the gold bars in the basement, some IRAs, savings accounts?
It's everything.
Yeah.
It's everything. We have IRAs. We have regular IRAs. We have Roth IRAs.
Yeah, so the IRAs are going to be a little bit different animal in how this is structured versus other things, and
Right.
and the IRAs wouldn't just all dump into that anyhow. The IRAs would still work as distributions, and essentially what the Secure Act enabled is for RMDs to continue to work for a special needs child situation. So if you were leaving a 500,000 IRA to that child, that whole 500,000 IRA would not get dumped into that. It would just move over as needed, or the stretch the required distributions over that child's lifetime. So it never would get dumped in there. So it would only go over as needed. Now, the rest of your estate, that depends on structuring, but I could see where that could be feeded there as needed on structuring. I don't necessarily see why, because you could always, once again, on a far as example of a irrevocable trust, could be instructed to fulfill certain functions going forward, but not have to dump all that money in at once. I could see that being avoidable for if there is indeed that clawback there. So because we're not going to dump all the IRA over into that all at once either, unless something is structured incorrectly. And that's the whole purpose that Wes talked about in last hour. And for the listeners, because we had a lot of markets jump in and add to the show this hour, but last hour we kind of had an estate planning hour on Winning at Life, and Wes Blanchard is an estate planning attorney that he and I work together, and we help clients with their money. So he's kind of crucial part of what we do on the trust and estate planning side. So that's what I'm referring to as that hour where we talked about. And I've just had a lot of special needs stuff come up lately, and IRA beneficiaries trust being named that, and in a way that it was creating taxable events on the whole entire funds, or potentially, and we want to educate people and prevent that. But I can see where you could once again get everything structured out to where it can avoid that clawback situation because too much was dumped in for that potential. Does that help you?
Yeah, somewhat, but I'm still a little hazy on if we're doing the right thing by putting it all right away into an estate trust, and then just putting it into the special needs trust as he needs it.
What type? Now, tell me about that estate trust. What type of trust is that? Is it revocable or irrevocable?
No, it's irrevocable.
Okay, and that would be executed at your death, I assume.
Right, exactly.
Okay. But it's all pre-set up, as is the special needs trust, and then it would feed money over. You have instructions in there for it to feed over to that. Now, those IRAs, what are you doing with those?
Well, right now, I'm converting some of them to Roth IRAs so that he wouldn't have to pay taxes when we die. But I'm getting to the point where if I convert any more, I'm going to go into the next tax bracket.
Yeah, well,
And
that's why you
whether
tackle that each year going forward. But once again, you know, what we were also talking about, to take advantage of a stretch IRA, your trust would need to qualify as an applicable multi-beneficiary trust, which Congress created as a part of the Secure Act. And there's a couple of points added to that. First, and much of the above assumes that at the time of your death, your child is in fact disabled or chronically ill as set out in the tax code. And second, ask yourself, and ideally who you're working with, if a traditional IRA is the best way to fund a special needs trust. And yes, an IRA is where most of people have their savings, but a large IRA can mean large required distributions. So this is where getting into that legal side of the question of you're asking of how much do you want fed into that special needs trust that might activate a clawback or some situation to that. That's why all this is advanced planning. And I can't answer your specific question. I'm saying Wes needs to get in, or whoever you're working with needs to get in and handle this, but they also need to structure it. It's not wrong to have IRAs, but you're needing this to work correctly and not have unintended consequences.
Right. I just didn't want him to pay more in taxes than he had to. And if the estate trust, he would have to take the IRA out in a matter of 10 years.
No, he's going to be able to take it out over the rest of his life if it's structured properly.
Well, that not in the estate, but in the special needs trust you're talking about, right?
Yeah. Well, you're not going to make the estate the beneficiary of the IRA. That's a bad way to go. Don't do it that way. You need to call my office, and I'll tell you how to do that when we come back from the break.
You all are so good. I've listened to you for years.
Ask Gregory is a financial podcast from the guys who bring you Winning at Life with Gregory Ricks.
I am near retirement, and I wish I would have been listening to y'all for the last couple of years.
Learn the ins, outs, do's, don'ts, rules, and tools of the financial world.
I have a broker who has no idea what you and I just talked about.
From your 401k to your IRA to your pension to your Social Security to your Medicare.
Hi, Greg. Appreciate your service to the community.
From your ETFs to your precious metals.
The program helps to ground me. There's some personal, real life there.
Find the Ask Gregory podcast on the Winning at Life app, the iHeartRadio app, Google Podcasts, Apple Podcasts, and Spotify, and wherever else you can find podcasts, probably.
That's exactly what I needed to know. Hey, I love the show.
Investment advisory services offered through AE Wealth Management, LLC. The firm is not affiliated with the U.S. government or any governmental agency.
2 questions. Do you have a pulse? Do you own anything? If you said yes to both, you probably need a will. You may even need a trust. We all know a lawyer. Do you know someone who specializes in estate planning? Do you really trust the husband of your sister's friend from college? Or would you feel better putting your family in the hands of the estate planning attorney of the Total Wealth Authority? I'm Wes Blanchard. What's your plan? Offices in Metairie and at wjblanchardlaw.com.
If you like money, you'll love the Winning at Life app. On the Winning at Life app, you can listen to the show live 6 days a week. And if we're not on at the moment, you can hear a replay of the latest episode of Winning at Life. Whether you're getting a late start on your retirement savings or keeping up with the financial news, Winning at Life with Gregory Ricks is there on demand. Hear the Winning at Life show on the Winning at Life app, your wallet's favorite app.
Most people think of Crime Stoppers as only a tip reporting line, but we're so much more. Crime Stoppers GNO has worked in our area schools, offering prevention presentations on trending topics from drugs, bullying, online safety, suicide prevention, and much more. And we have a high school teen leadership program which provides students with a first-hand look at the criminal justice profession as a future career, while learning to be an advocate for their fellow students. So to learn more, visit safeschoolsla.com or call 504-837-8477.
Fox News, I'm Jared McHugh. Mixed messages from the White House over the Kyle Rittenhouse acquittal.
President Biden said that he had some concerns with it. He was also asked about it on the South Lawn yesterday when he returned from a medical appointment. But the reason that he put out a statement saying that the verdict is the verdict and we need to accept the verdict is it was a chance for him to call for calm, which for the most part, as we've seen in our reporting, things have largely been calm.
Fox's David Spunt. The streets of Kenosha have been mostly quiet since the verdict was announced. There was some rioting last night in Portland, Oregon. Some heavy rains forecast for much of the East Coast today.
Some of these could be periods of heavier rain through Florida, taking us Miami all the way up to Melbourne. The low pressure comes out of the Great Lakes, brings some showers, maybe up to an inch in spots, especially through the Ohio and Tennessee River Valley. But I think the cold air behind that, that's what really gets your attention because it brings a chill.
Fox meteorologist Amy Freeze. America is listening to Fox News.
Winning at Life with Gregory Ricks is a copyright of Down South Strategies for the private use of our audience. Any unauthorized use of this broadcast without express consent is prohibited. For podcasts, show information, and contacts to our sponsors, go to winningatlife.com or download the Winning at Life app. If you've got a financial situation and you're not quite sure what to do, you better call Gregory. We are Winning at Life with Gregory Ricks.
Hey, y'all. You're listening to Winning at Life, live financial news talk radio. This is the Money Show on Saturdays. We're here with you till 1 o'clock. If you have a financial situation, not sure what to do, hey, lean on me. I'll give you a little bit of help, maybe some guidance. 504-2600-995. Jump over to my website to learn more about what I've been doing for the past 30 years and helping people. And I've got offices over in Baton Rouge, Louisiana, Mandeville, Louisiana, Metairie, Louisiana, and Gulfport, Mississippi. And we help people across the country. We can do so by phone, by video. You know, there's e-docs. It's a different world today. But if you want to sit down with my team, I do have those 4 offices, so you can sit across the table and get a little bit of help. And just to do that is just one phone number. We'll hook you up in any way you need. That office number is 504-832-9200. And the website's gregoryricks.com. I'm gonna give Jim a couple more minutes here on this discussion because something came up right at the end before we had to jump to break. Are you still with me, Jim?
Yes, I am.
Jim had called in, for the listeners that have just joined us, asking about a special needs trust. And this is my third hour on live radio this morning. The previous hour, we had Wes Blanchard with us talking about trusts and estate planning. And we kind of focused in on these IRAs naming trust as beneficiaries, which is a taxable event. And what it came to light there at the end of the conversation, Jim, is you kind of mentioned about your estate trust, which is handling all your stuff when you die. Right. And it sounded like you may have named your IRAs, named the beneficiary of those IRAs that estate trust, for lack of having a better way to handle that. That is a fully taxable event. You ain't got to worry about the special needs trust being taxed or whatever. You've already created the tax because your IRAs cannot go to an estate trust, whether revocable or irrevocable, without being fully taxed. And trusts are taxed at max tax brackets as well. So not a good way to do that. So you can't do that way. What would be better is the special needs trust would be the Benny of those IRAs, and it's only taxed as the money moves over to the special needs trust. But you're creating, if you go through a state trust, well, boom, you've taxed it. It's all taxed. It's done at max tax.
Well, what do you do? What do you do between the time that I die and the time that you start putting money in the special needs trust? I mean, where does the money go in the meantime?
Well, are you already funding the special needs trust?
No.
Okay. Well, you'll definitely be doing so when you die, because the IRAs would feed, and let's just focus on the IRAs. The IRAs, if they're named as a special need, there's nothing to do with it. It's your money. It's not in your trust now. It's your IRAs. You own and control them. You can do what you want with the money. One of the things you're already doing, which is a great solution, is doing Roth conversions, because you're also passing money to the special needs trust that's not going to be taxable. But it's your money to do with what you want. We're talking about when you die.
Well, that's
where do these IRAs go? Then you're going to name and this is a high-level conversation here. This is where it needs to be more personalized and a look at everything going on. So high-level conversation here is the Benny of your IRAs should be a properly structured special needs trust. And because of what the Secure Act created the ability to set up a trust that enables the lifetime RMDs to be available to the special needs adult child without blowing everything up. Because otherwise it's a 10-year payout. So there's room for this in the code for that to happen. And it's got to be an applicable multi-beneficiary trust. So the RMD is going to feed through that. And depending on how big your IRAs and Roth accounts are, that could be more going through that from RMDs. That's something we could talk about at another time. But that's what you want to do with your qualified accounts. Then you've got the rest of your assets that you would have instructions of what to do with those assets. How would that feed over, or what else would you do with those? Maybe you may not push any more money into the special needs trust, but that's a bigger picture of what do you do with I don't know what your worth is, whether you're worth 500,000 or 5 million, but it's all can be structured, but you can't have these. I just wouldn't blow up the IRAs. And one of the things, maybe some of these IRA money needs to be spent to buy life insurance. That might be a better way to go. Two of the better ways to handle this is Roth money and life insurance to feed a special needs trust. Something to think about there. And once again, you as well as other listeners, and you're not the only one out there, Jim, this is coming up a lot. And the other part of this is people making trusts beneficiaries of their IRAs is not proper structuring. So call my office, 504-832-9200, website gregoryricks.com, and let's talk about this some more. Thanks for listening, Jim, and have a great weekend.
Thank you.
Thanks, Jim. All right, Deborah in Ocean Springs. You're up next here with Winning at Life with Gregory Ricks.
Hello.
Hey, Deborah. How are you?
Hi, how are you?
I'm doing
good.
great.
How are you?
I'm doing awesome. Glad to hear you're good. Go ahead.
Well, good. We want to do something for our grandchildren, just to some type of account to put in money like Christmas, birthdays, different occasions, and then, just give to it periodically. And, a normal savings account just really doesn't do anything. It's just your money there. What is the best thing to do for a grandchild that, maybe could keep growing? What is it? Would it be better to open CDs, or can you open an IRA in their name? I mean, I'm just wondering what is the biggest bang for the buck, I guess.
Okay. Well, CDs aren't getting much more than your savings account. I think it's the yield is your issue there. Now, an IRA, it depends on whether or not they have earned income. If you have a
they don't.
Okay. Well, I was going to say, if you had a business and they could do some type of work that they're old enough to do that, you could compensate them, create current earned income, and then put it into a Roth IRA for them, which would be pretty awesome. But as you mentioned, you don't have that. With that said, 529 plans are a great way to go, and it's almost, with the rules now, it can almost be kind of like an estate planning tool, but it does have to be used for education. And if they don't use it, their kids could use it. The beneficiaries could be changed to that. But you sound like a similar call that I had where I want to put some money away for my kids. I don't have a certain amount, but I just want to keep adding money to it over the years and them to be able to use it at some point. But I want it to grow some. So here you go. A Uniform Gift to Minors Act, or you'll hear me call UGMA accounts. And that's where you're the custodian because you set it up. You're the guardian of the money. You can keep adding money to it. You can even do it investment style to where maybe perhaps you might consider, if they've got a long ways to go, like 10, 15, 20 years till their age of majority, which depends on what state. It might be 10, 15, or almost 18 years. You could put, say, maybe a exchange traded fund connected to, let's say, the S&P 500. When you've got plenty of time, that can work well. It goes up and down, but over time it shows that it grows. And I think it's what you might be hinting at. How can I get more growth? But here's the catch. When they're age of majority, it's their money. By setting this up, you give them control when they are age of majority. It's their money.
Now, when you say age of majority, does that vary by state? Or is it?
It does. We'll just call it age 18 because that's what it is in Louisiana. Some states it may be 21, but it's their account at that point, which is fine. As long as you know that going in. If you kind of say, well, I don't want Jim Bob to go buy a Porsche. Well, he can. It's his money, or he can use it for college, down payment on a house, wedding ring, whatever he or she would want to do. Hope that helps, Deborah. Thanks for calling Winning at Life. I'm going to plug what we kind of do as my day job during the week. We help you with your money. We're money managers, we're strategists, income planners, investments. Another is healthcare, whether it's long-term care or Medicare, and having supplements and such, estate planning. And then the fifth part is tax planning, creating tax efficiency. Regardless of the area you're listening to across the country, we can do video meetings. We can start with a phone call, do Zoom meetings. As far as in office, I have an office in Gulfport, Mississippi, in Mandeville, Baton Rouge, and also in Metairie, Louisiana. So the office number is 504-832-9200. The website is gregoryricks.com. And I look forward to hearing from you.
Investing involves risk, including the potential loss of principal. Investment advisory services offered through AE Wealth Management, LLC.
When I was growing up, my mom relied on old wives' tales to get rid of outdoor bugs. One method included putting 2 pennies in a bag of water and hanging them throughout the backyard. And let's not forget Mom's go-to, the citronella candle, which never worked. It's the 20s. We have science and much more thorough ways to get rid of bugs. Call Mosquito Joe. Mosquito Joe has this time-release capsule that they spray that slowly releases their mosquito death over a course of a month. Because mosquitoes suck. NewOrleans.mosquitojoe.com.
Ask Gregory is a financial podcast from the guys who bring you Winning at Life with Gregory Ricks.
I'm your host, Gregory Ricks, a financial advisor here to answer your questions and help you win with your money.
Find the Ask Gregory podcast on the Winning at Life app, the iHeartRadio app, Google Podcasts, Apple Podcasts, and Spotify.
That's exactly what I needed to know. Simple information from good people.
Investment advisory services offered through AE Wealth Management, LLC. The Ricks Report with Gregory Ricks.
I kind of like using 3 asset classes. I like exchange-traded funds, index-linked stocks. We take those ETFs and we'll invest in stocks through the indexes on the ETFs. We'll use bonds also through exchange-traded funds. And then we like to use annuities to take risk off in the third asset class, to take the risk off, but we're still wanting to index link to get the upside of the market without downside exposure. And that blend is subject to your risk. That's kind of how I look at it. And when we look at the numbers and run historicals, that shows the higher probability of success.
Winning at Life with Gregory Ricks. Find us on the Winning at Life app or winningatlife.com. Investment advisory services offered through AE Wealth Management, LLC. Investing involves risk, including the potential loss of principal.
Again, the world's in the toilet and the market's in the tank. Well, I can't fix that. No, but I can fix a drink, pour it on ice, mix it on.
Maybe that'll help your Saturday afternoon. Just fix a drink. I can't fix a drink, but I can help you fix your money. Give us a call, 504-260-0995. Let's clean up Deborah's call a little bit because, as you can tell, I was going to a break. But a Uniform Gift to Minors Act provides a way to transfer financial assets to a minor without the time-consuming and expensive establishment of a trust. The UGMA account is managed by an adult custodian until the minor becomes of age, at which point the minor assumes control of the account. We custody assets at my firm at Fidelity Investments. So when that child becomes of age and we've got an UGMA account, Fidelity actually will freeze that account, which forces the retitling of it to the child's name. Over the years, this used to be a little bit more fluid, and it wouldn't happen until the adult custodian retitled it. But to be clear, the minor doesn't need the adult to do anything. The minor can step forward if they're aware of the account and they're of legal age. They can just make it happen. Why? The money belongs to the minor. Here's another cool thing about it. The UGMA account's generated earnings are not tax sheltered. Maybe that's not a good thing, but they're not tax sheltered. This is not a tax sheltered account. but they are taxed at the minor's lower kiddie tax rate up to a certain amount. And then it wouldn't be taxed at the child's rate, it would be taxed at the custodian's rate if there was so much earnings in that account each year. So refer to your tax professional or CPA regarding what those limits are or when that might happen. Early on, it's not, but depending on how much you're putting away, and there's not really a limit on how much you could push to that account. It's just ultimately how much do you want to pass to them when they become an adult? And there's no requirement on what or limits on what they can spend it on. It's really up to them. They buy a house, buy a car, go to Europe on it. Now, once again, let me go back to special considerations because I was a little bit loose on saying as much as you want. Well, it's as much as you want because I don't have people like, I'm going to give my grandkids $100,000 a year. Contributions to UGMA accounts are made with after-tax dollars. The donor doesn't receive an income tax deduction for making them. However, up to $15,000 a year individual or $30,000 for a married couple, because I kind of look at this more from a couple standpoint. That's a pretty sizable gift. So $30,000 for a married couple can be contributed free of gift tax for tax years 2020 and 2021. We'll see what 2022 is going to be, but that's a pretty good amount to be given. They do adjust that gift tax upward a little bit. I've not looked at this coming year's amount, but $30,000 a year. You did it for 10 years. Yeah, and this is just 0%, but the math says you've given them $300,000. I personally hadn't seen a UGMA account quite that size, but have seen them be very sizable as well. So once again, important things about investing. And one of the reasons is you can choose various investments. One of the core rules that makes that great for investing is you're probably going to let it ride. Now, if it's getting closer to, say, the child becoming of age to have control of that account, you might want to adjust the investment mix. Because I'm not a believer where all money should be in the S&P 500. Why? Darn, that would be risky in that case. Let me give you an example. If we go back to, let me see, grab a file here. But if we go back to 2020, and the S&P 500 in 2020, in 2000. Yeah, that's the proper year. We go back to 2000, 2001, 2002. There was 3 consecutive years the market was down. Back in 2000, it was down a little more than 9%, and the 2 subsequent years went into the double digit. And that's one reason we talk about sequence of returns there. Like, darn, you put money to work, especially if you're taking income out of it, that could really injure an account. But being it was down, say, 10% in 2001, 11% in 2002, you had 9, 10, and 11, and I'm underestimating slightly there. But that's consecutive negative years on an account. Of course, some good years for a few years after that, and then boom, 2008 hit. But for example, if you looked at that, say on Vanguard's S&P 500 fund, it averaged 8.07% over the past 21 years. So $1 million would have taken a pretty good hit that first 3 years, but you'd have been somewhere over 3.5 million at the end of that 21 years. But on the opposite end, if you were taking income from that, say 4% and inflating it at 3% a year. At the end, you'd start out taking in 2000, 40,000 out, and year 21 at the end of 2020, you would have taken out a little more than $72,000 for that year's distribution because of you inflating it at 3% a year. That $1 million would be worth just over $314,000. Well, how did that? Because of volatility, the account did not have enough runway to where it was left alone to recover. That right there is a case of when you get into the distribution phase, you need the right balance of asset classes and probably need to reduce the direct effect of stock holdings. So sequence of returns doesn't impact your portfolio negatively when you start taking income for the next 10, 20, even 40 years for retirement. Think about that way. And also regarding those UGMA accounts, well, maybe when it's about time for the child to get control, it might get a little bit more conservative, not just have it all in that, say, S&P 500 fund or exchange traded fund. So hopefully that information helps you as well on future decisions.
Chucky in New Orleans East, you're on with Winning at Life with Gregory Ricks.
Hello.
Hey, Chuck.
Hello.
Yeah, we have you.
Hey, how you doing?
We're doing
Yeah,
pretty darn good. I've got 4 minutes left. Well, actually 2.5 minutes left in the show, so we have to be quick.
All right. I'll make it quick. One, I'm just amazed with the jobs numbers that are coming out recently. I mean, it's really fantastic for the country. But two, my question is on, I'm getting a little bit of a bonus, or my wife's getting a little bit of a bonus, about $30,000. Wondering how much of that we should put into the, we have two daughters in grade school. How much to put into our 529s for each kid this year, and or should I take a chunk of that and pay off? I got a car loan, about $12,000 left on a car loan at 3.25%, and I'll listen off the air.
Well, hold on. How much do you owe on that car? Oh, he's gone. Did he say how much he owed on the car? He's wanting to pay, but 3.29's pretty low money. But one other part of that is regarding a 529 plan. So you can, some families use 529 plans as estate planning vehicles since contributions are considered completed gifts to the beneficiary up to $15,000 per donor per beneficiary. So it depends on what you're trying to do longer term. The debt regarding the car depends on, is that going to help you save more money? Are you going to turn around and buy another car? You know, I don't know. Do you know anybody that keeps their car for 15 or 20 years? I've had good intentions on keeping vehicles a long time, but I don't. I do have a 2000 Ford Ranger I still own, but I don't drive it anymore. Hadn't for years, but I still have it. So if you have a financial situation, not sure what to do, call my office. We will help. 504-832-9200. Go to GregoryRicks.com.
We are Winning at Life with Gregory Ricks.
Investment advisory services offered through AE Wealth Management, LLC. Winning at Life with Gregory Ricks is for informational purposes only and does not recommend the sale or purchase of any specific securities, investments, legal advice, or tax advice. Investing involves risk, including potential loss of principal. Raw conversion is a taxable event and may have several tax-related consequences. Be sure to consult with a qualified tax advisor before making any decisions regarding your IRA. The information and opinions contained herein are provided by third parties and have been obtained from sources believed to be reliable, but accuracy and completeness cannot be guaranteed. Neither AE Wealth Management nor advisors providing investment advisory services through AE Wealth Management recommend or facilitate the buying or selling of cryptocurrencies. The firm is not affiliated with the U.S. government or any governmental agency. The firm offers insurance services. We are Winning at Life with Gregory Ricks.
WRNO FM, New Orleans, an iHeart radio station. Available everywhere on our free iHeart Radio app.